Okay, good morning everyone. Am I audible? Thank you. Let's start. So yesterday what we have discussed? We have discussed the concept of surplus transfer, reserve transfer to Government of India. Then we discussed the concept of the Basel guidelines, Basel 1, 2 and 3, the idea of merger of the banks, idea of a big bank. Then we discussed the other important concept DICGC, right? Why DICGC important, etc., etc. Right? Then we are about to start with NPAs, non-performing assets. Now let's start from here. Right? We were there in the slide. Let's start from here. So whenever you borrow money and repay the loan, right, it becomes a standard asset. I remember you borrow and repay, it becomes a standard asset. And when you don't repay for 90 days, this will be classified as special mention account. And finally, after 90 days, you borrow and don't pay, right, for 90 days, this will be referred to as non-performing asset. Remember this. What is a non-performing asset? Technical definition. Non-performing asset is a loan which is given by a bank wherein the payment, the money that is supposed to be paid, is due for over 90 days. For 90 days, you have not repaid the money. That is basically the technical definition of NPA. Now, once you classify an account as NPA, this will remain a substandard NPA for next 12 months. I'll repeat the statement. Let's imagine 1st of April 2022, a particular loan or account has been classified as non-performing asset. Now, this will remain as a non-performing asset, that is a substandard non-performing asset for the next 12 months. For the next 12 months, that is basically till 31st March of 2023, this will remain as a non-performing asset. This will remain as a non-performing asset. Which type of non-performing asset? Substandard non-performing asset. Substandard. So once an account is classified as an NPA, for the next 12 months, right, once it is classified as an NPA, I'll refer to this as substandard NPA. Now, after this, after 12 months is over, more than 12 months, up to 36 months. I repeat, more than 12 months, up to 36 months. This will be referred as a doubtful NPA. Right? I'll repeat it. Don't get confused. Once your account is classified as an NPA for the next 12 months, that is 1 year, this will be referred as substandard. After 1 year is over, 12 to 36 months, for the next 3 years, this will be classified as doubtful NPA. And finally, after let's say 1 year here, 36 months, that is 3 years, this will be classified as loss-making NPA. Remember, the classification can be asked by UPSC. Right? So 90 days, you don't repay. We'll call this as right the special mention account. After 90 days, I will classify this as NPA. Once classified as an NPA, for the next 12 months, substandard NPA. Right? After 12 months, for the next 36 months, doubtful NPA. And after this 1 year and 3 years, it will be classified as a loss-making NPA. This is the classification, just factual information. Remember this. Now, why the NPAs are higher in the banking sector? If you have been reading newspaper, you'll know that NPAs in the banking sector are very high. Why? What is the reason? Why NPAs non-performing assets are higher in case of India's banking sector? I'll club the first and second. Follow this carefully. Imagine here is a bank. Imagine here is a bank. The bank has given a loan to a company. Now, the company will produce goods, sell the goods, earn revenue, and repay the loan. Any doubts? Let me know. The company has taken a loan. This is a loan. The company will take a loan, produce the goods, and sell the goods, collect the revenue, and repay the loan. This is generally the cycle that we expect. Now, you tell me, all of you know the reason. You tell me, when there is a situation such as a pandemic or slowdown in the economy, what will happen to sales? Will the sales of the company be higher or lower? I can understand this. When there is a pandemic or a slowdown in the economy or recession in the economy, what do you think will happen to the sales of the company? The company sales are very low. Neither they are able to produce and sell in the domestic market or in the international market. As a result of this, many companies incurred losses. Many companies were forced to shut down. Their revenues were very, very low. Now, imagine you are owner of the company. Understand this, right? It's very simple, logical explanation. Imagine you're owner of the company. Your company has incurred a loss. What will you do with the repayment of the loan? Will you repay the loan, or you'll simply say, sorry, I don't have money, I will not be able to repay the loan? You understand, right? You have to choose one. Most of you will say, sir, obviously, because I've not earned money, I will not be able to repay the loan. So if you don't repay the loan, what will happen to the loan account now? This will be classified as non-performing asset. This will be classified as non-performing asset. So lower global demand, slowdown in the domestic market have contributed to large amount of NPAs in the system. Next, willful defaulters. Number of willful defaulters. Now, what do you mean by willful defaults? Let me explain the definition here. Reserve Bank of India classifies the willful defaults like this. First, understand this carefully. Imagine you are a bank. I've taken a loan from you. Taken loan. I'm a very rich person. I'm a businessman. I have a lot of money, which means I can easily repay the loan to you. I have to understand the statement here, right? You have given a loan to me. I'm very rich. I have a lot of money, lot of assets, which means I can easily repay the loan to you. Now, despite having the capacity, I'll repeat the statement. Despite having the capacity of repayment, I will not repay the loan. I will default on the loan. I'll repeat it again. A loan has been given. The borrower has all the capacity to repay the loan. Even then, the borrower doesn't repay. The borrower defaults on the loan. This is called as a willful defaulter. Right? This person is called as a willful defaulter. A company is called as a willful defaulter. Right? Best example, Mr. Vijay Mallya, or many bigger companies in India. Now, I'll give you a second example. Second very important example. Imagine I've taken a loan from you, and when I take a loan, I will give you an asset. I will provide certain collateral to you. I'll take a very simple example. Imagine I've taken a loan from you, and this is the collateral. This is a security I said, right? If I don't repay, you can come take this away. But now what happens is, without your knowledge, I will try to sell off the collateral to someone. Is the system okay here? Let me know if there's a problem. One, I will take a loan. Step one, I will take a loan. I will provide security. Now, without your knowledge, I will try to sell off the security in the market. Then also, bank will classify you as a willful defaulter. Third situation, I've taken a loan from you, and I said, I want to use the loan to purchase this asset. Simple. I want to purchase this asset. I'm a company. I will take a loan and say I will purchase this asset from the loan. But now you come to them to check. You come to the company to check and ask me, sir, please show me which asset have you purchased. I've given a loan. Show me which asset you have purchased. I'm unable to show the asset. Why? I have not purchased the asset. I told you I will take a loan and purchase the asset, but instead of using it for purchasing the asset, imagine I purchased my own car. I purchased a home for myself, etc. So generally, whenever these kind of situations will exist, where you have capacity to repay, you don't repay. You will take an asset, provide a collateral, you will try to sell the collateral without the knowledge of the bank. You have purchased or you have taken a loan for purchasing an asset, but you have purchased something else. Generally, in these kind of situations, you are announced as a willful defaulter. You are declared as a willful defaulter. Now, in case of India, what has been the number of willful defaulters? I'll give you the latest data. In case of the Indian economy for the current year itself, there are more than 2,700 willful defaulters. More than 2,700 willful defaulters. I believe the exact number which was given in the parliament was 2,790 plus. That's a very high number of willful defaulters. And the problem is, if these are not going to repay the loan, willful defaulters means they're not going to repay the loan. What will happen to NPAs? NPAs will be very, very high. NPAs will keep on increasing. Next, inefficient functioning of Debt Recovery Tribunal. DRT stands for Debt Recovery Tribunal. Now, I will give you one concept. Remember this. I will give you one concept. Whenever a company borrows and doesn't repay, here is a bank. Bank is giving loan to a company. Company borrows, doesn't repay. In such cases, the bank will file an application against the company at National Company Law Tribunal. National Company Law Tribunal. NCLT. National Company Law Tribunal. So follow this carefully. A company will take a loan, doesn't repay, then the case will be filed against the company at National Company Law Tribunal, NCLT. And whenever a retail borrower, that is an individual, such as you, such as me, etc., will take a loan and we don't repay, the individual against this individual, the case will be filed or application will be filed at a DRT. Debt Recovery Tribunal. DRT long form I've already written here. Debt Recovery Tribunal. So understand this carefully. Government of India, in order to address the NPAs which are generated because of the individual borrowers. For example, I have taken a loan from you. I'm supposed to repay it, but I will default. I'm a retail borrower, individual borrower. So in such cases, the government of India back in 92-93 set up debt recovery tribunals. And the whole idea was whenever a retail borrower will default, we will go and file an application in the debt recovery tribunal, and the tribunal will allow us to recover the loan. Right? They will issue an order asking the person to sell the asset, asking the person to repay the loan, etc., etc., etc. That was the whole idea. And when we set up DRTs, we expected the cases or the applications will be cleared in 6 months. Remember this, 180 days. When we set up the DRTs, we expected that the DRTs will clear the cases or the applications in 6 months. That is 180 days. But what has happened is, rather than clearing the cases in 6 months, the DRTs are taking a lot of time. And there's a valid reason for it. The number of benches, number of judges which are there are comparatively lesser to the number of cases. Let me ask you a very simple question. Imagine there are 2 judges and 10 applications. 2 judges and 100 applications. Now tell me, if this is situation A and situation B, where do you think there is a lot of delay? It's very simple. Right? Where do you think there is a lot of delay? Obviously, it will be situation B. It should make sense to you. Right? So number of cases have increased exponentially, very, very high. And number of benches are very, very low compared to that. And as a result of this, there is a lot of pendency of cases. The retail borrowers have defaulted. Their accounts have become NPAs. Have dragged the borrower to DRT. Case is pending. Right? The number of NPAs have increased. And finally, governance issues. Right? Let's assume you are the government of India. You will give a contract to me to construct, let's say, a building, to construct a national highway, to construct a port. Right? Like this infrastructure, you have given a contract to me. I'm supposed to construct it, but one of the ministries is not giving me the clearance. I can understand this. One of the ministries is not giving the clearance to me. Let's say the Minister of Environment and Environment Affairs. That ministry has withheld my environmental clearance. Or else, all the ministries have given the approval. I'm supposed to start constructing, but somebody has filed a case against this in the Supreme Court of India, saying that this particular construction of road is happening in ecologically sensitive area. The dam is being constructed in ecologically sensitive area, etc. like this. And generally what will happen? The Supreme Court of India will say, please stop the construction. Let me have a look at it. So what will happen because of this? The infrastructure will not be constructed. I have taken a loan. If the infrastructure is not constructed, how can I repay the loan? Because I'm not generating revenues. So as a result of this, the development of infrastructure will affect it. The loans have been taken. I will not repay the loan. NPAs will keep on rising. Right? So these are some of the very important reasons or the causes why there are high NPAs in the economy. And what is the impact of high NPAs? If the NPAs are very high, what is the problem? Understand one by one. Here is a bank. Follow this carefully. Here is a bank. The bank has given loan to a company. Company doesn't repay the loan. Now start answering. What do you think will happen to the profits of the bank? Right? I'll repeat the statement. What will happen to the profits of the bank? The profits of the bank will come down. Many of the times you must have also read in the newspaper, the bank has incurred losses. So first outcome is this. You already know it. You need to just apply the logic. Now second question to you people. If this bank has very high NPAs, profits have come down, would you want to keep deposits in the bank or keep in some other bank? I can understand this. If this bank is consistently not performing very well, incurring losses, what do you think will happen to the deposits? What do you think will happen to investor confidence? Investor confidence will also be very low. Third question to you. By the way, what is written here, I'm explaining that. Third question to you. Process earlier was, step 1, you will give loan. Step 2, company will sell the goods, earn revenues. Step 3 was, company will repay the loan. Now, don't you think the cycle will continue? The cycle will continue. You will recollect the loan. You will again issue loan. They will sell the goods and services, earn a revenue, and repay. The cycle is supposed to continue like this. Now, in the cycle, third step is broken. The link, third number link is broken. The company has incurred losses. It is unable to repay the loan. Now, you tell me, if you are the bank, you are finding it very difficult to recollect the loans. What will happen to your lending activity? What will happen to your lending activity? Will you start lending more and more, or you'll be very circumspect or concerned about giving loans? Second one would be correct. I understand this. Second one would be correct. You're very concerned about giving loans now. If the same company which has defaulted approaches you, tries to take a loan, will you give loan again? You'll simply say, no, sir, please repay the earlier loan. There is already NPA in your name. Please repay the earlier loan. So don't you think your lending activity will also get affected? So have a look at this. Lending activity is affected. Amount of money that you have to lend is lower. Profitability is affected. Investors and depositors are concerned about you. Now, if you give lesser and lesser loans, if you reduce the amount of loans because you are concerned, what will happen to investment in the economy? what will happen to investments in the economy? Investments will come down. If the investments will come down, what is expected to be the impact on growth? I understand. What do you think will be the impact on the growth? Companies are taking less loans, they are investing lesser, creation of lesser jobs, lesser production, and limited impact on the growth. Or there is a limiting impact on the growth. Are all the points clear to you? Just keep on applying what you have learned one by one, you will get the answer. Then, so these are the impact of very high NPAs in the economy. And please understand, this is important. So why should I learn all of this? Banking sector is driving the growth in the economy. Right? Banking sector drives the growth. Banking sector will provide a lot of loans for both consumption as well as investment. And if the banks itself are suffering, what do you think will happen in the other segment? Right? What do you think will happen to investment? What do you think will happen to the savings, etc., etc.? That is the reason banks are very, very important. And let me give you a basic point here. How do you connect all of it? I hope you remember the concept of capital formation. Have you understand this? I hope you remember the concept of capital formation, sir. When did you discuss it? I believe in third or fourth class. I'm pretty sure. I believe in third or fourth class. Now, if you go back to the slide and have a look at the slide, I'm pretty sure I would have told you one thing. If there is supposed to be a capital formation in the economy, you need one institution which will collect the savings, convert that into investment. Just check it. Right? There will be a picture that I've written. If you want to have a capital formation in the economy, you need somebody in the economy who will collect the money from the household, translate that into investment. I would have written it. So if the banking sector itself is suffering, don't you think the whole cycle of economy will also suffer because of that? That is the reason. Okay, now NPAs are very high. Agreed. What will you do? What is the way forward? How do we reduce the NPAs? The most important policy that has been implemented by the government is insolvency and bankruptcy code. Either they will say insolvency and bankruptcy code, or else they will say insolvency and bankruptcy law. It has been more than 5 years since the implementation of this particular code. Now, what is this law? What is the law all about? Understand this very carefully. Understand the logic. What was the need to implement IBC? Earlier, there were different laws. Okay, earlier there were different laws which took care of insolvency resolution. Now, what do you mean by insolvency resolution? Follow this carefully. I will explain this. Follow the concept carefully. Don't be confused. I will start using the short form IR. Let me ask you a very simple question. Let me explain. Imagine you are a bank. You will give loan to a company, and the company doesn't repay the loan. They don't repay the loan. Now, what is the way forward? Either there are two options for you. You will sell the company to somebody else. Sir, why will the bank sell the company? Because when the company takes a loan, they will have to keep a collateral. They'll have to keep a security. They will keep the company itself as security. Simple. So you are a bank. A company has taken a loan and they have not repaid the loan. Now, what is the way forward here? Either you will ensure that the company will be purchased by somebody else in the market, some other company in the market, or the company has to be closed. Company has to be wound up. Wound up means closed. So that you will sell the company's machines, you will sell the land of the company, and you will collect the money. Simple logic. Right? It has to be one of the two. Now, let me ask a very simple question. I will answer it. Don't worry. Let me ask a very simple question. If you are the bank, which of the two would you prefer? I'll repeat the statement. If you are the bank, which of the two would you prefer? Right? Please choose one. Please choose one. Some of you have said two. Why not two? I will explain it. Right? Understand this very carefully. Let me give a very simple example. Can you see the flask in my hand? What are the components in the flask? If you want to manufacture the flask, what is the component? You require steel and you require plastic. Now, tell me a very simple question. Simple question, by the way. If I sell the steel individually and plastic individually, will it get me more value? Or I will put both of them together, make a flask, sell it to you. Will the flask get me more value in the market? Or right, the steel and plastic, will that get me more value in the market? It should make sense for you. So, of course, the flask will fetch me better value. Apply the same logic to this example. Apply the same logic. Here is a company. But what do you mean by company? Workers are there. Manufacturing facility is there. Machines are there. Lorries or trucks are there. Now, if you put together all of these components, you have a company. Now, apply the same logic and tell me, if you sell all of them individually, you'll get more money, or if you put together all of them and sell, you'll get more recovery or more money. I understand it should make sense to you. It should make perfect sense to you. Sir, when I combine all of them and I sell the company to somebody else, right, I will get better recovery. For example, imagine I'm selling to you. What would you prefer? A company which is already there, machine is there, manufacturing facility is there, workers are there, or you want to purchase machines separately, you want to hire labor separately, etc. Right? So obviously it makes sense to sell the company as a whole. Now understand the point carefully now. Whenever the company is sold to a new buyer, this is called as insolvency resolution. Whenever the company is sold as a unit to the buyer, this is called as insolvency resolution. And whenever the company is closed and the components of the company, that is machines, trucks, land, are sold to different people like this is called as a liquidation. This is referred to as liquidation. And if somebody will ask you in UPSC, which is better, insolvency resolution or liquidation, please say, sir, it is insolvency resolution, which is always better. Why? I expect a better amount of money to be collected, but more importantly, second very important point. Imagine you are a manufacturer. I am supplying raw material to you, and I am this company. Have you understand this? Imagine you are a manufacturer, and I am this particular company. Now, if this particular company is purchased by one more buyer, they will continue to produce the raw material and sell it to you. But rather than this, what if they close it down? If they liquidate it, don't you think the supply of raw material too will get disrupted? I will not be able to supply the raw material to you. Now you will have to find out somebody else in the market, etc. Have you understand this? Again, so how can you sell a man? I'm not selling man. I did not give an example of man also. I said company machines are sold. Companies manufacturing facilities sold. Trucks are sold. So how can you sell workers? I did not say you sell workers. You will remove workers. You will lay off the workers. Again, please be very careful. Right? Don't generalize what I say and say how can you sell a man? It is against the law. Right? So please be very careful. I said companies manufacturing facility will be sold. Machines will be sold. Trucks will be sold. Right? Maybe while explaining I said, right, what if I sell them differently like this? But I hope you understand. Right? Don't At least apply your logic. Right? Nobody can sell a man. Nobody can sell a man. Right? I don't know how you people right generally take these particular terms. Okay. So come back to this. Earlier, what used to happen was, follow this. I'll go back to the basic point here. Right? Earlier, what was happening was there were different laws. There were different laws for conducting insolvency resolution. Is it okay? Right? There were different laws for conducting insolvency resolution. A simple question to you: if you are a company, what would you prefer? One law for conducting insolvency resolution or multiple laws for conducting insolvency resolution? Apply common sense, you will understand it. Right? Whether it is good to have one law or multiple laws, always good to have one law. Always good to have one law. Now, what the government of India has done? They have taken all the provisions. They have taken all the provisions from all the laws. They have consolidated this into one law. Now, can I say this? Right? Let me know if there's a problem. Can I say this? Because government of India has taken all these provisions from different laws, made it into a consolidated law. It is promoting ease of doing business. It is promoting ease of doing business. Right? So one of the objectives or one of the positive aspects of IBC is promotion of ease of doing business. Now, what are the important points under this? One, government of India has set up a regulator. It has set up a regulator under IBC. Just like it is the RBI's role in order to regulate banking sector, there is one more authority in case of IBC which will regulate the application of insolvency and bankruptcy code. So what is the role? Are the NCLTs following the provisions? Are the companies following the provisions? How are we conducting the process? That is the role of Insolvency and Bankruptcy Board of India. Second one, insolvency resolution. Sir, what is IR? I've already explained. Insolvency resolution will be handled by a professional now. There is a professional, an expert. The name of the professional is insolvency professional. What is the role? Just give me some time, I'll explain it. The insolvency resolution process now will be conducted within stipulated time period. What is the period? 330 days. 330 days. Within 330 days, we are supposed to finish the process of insolvency resolution. Next, there is a separate process for both individuals as well as corporates. Again, don't worry about individuals, not at all relevant for UPSC. Focus on corporates. That is what is required for UPSC. Now, DRT, NCLT, already you know the names. Now, let me start. Let me start the process. Okay, let me start with process. I've written bill here because as per the bill, this was a process. The bill already has become act. It is a code now. It is an act. Now, what will happen under this particular process? Follow this carefully. The first step is either the lender or the borrower will approach NCLT, National Company Law Tribunal, and file an application. Imagine you're a bank. I'm a company. I've taken loan from you. I did not repay the loan. So what you'll do? You will go to NCLT, file an application against me. Or else, I myself can go to NCLT and say, I will not be able to repay the loan. Please conduct insolvency resolution. Has it happened in the past? Of course, yes. Many companies, they have gone to NCLT and said, we are unable to repay. Please conduct insolvency resolution. Now, once the application is filed, in the next 14 days, I repeat, once the application has been filed, in the next 14 days, the NCLT either has to accept it or reject the application. They will have to accept the application or reject the application. Now, once they have accepted, the authority will appoint an expert, a professional who is an expert in conducting insolvency resolution. Now, this particular professional will put together the committee of creditors. What do you mean by creditor here? The lenders are called as creditors. I repeat, the lenders are referred to as creditors. Many of you are asking for the full form of NCLT. I've already told it. Where were you? I don't understand when I tell you the concept of where you will focus. Have I written the full form of NCLT earlier? Please have a look at it. Right? Many of the times I believe you actually joined just now or you woke up just now. Right? Already it is discussed. Focus on what is being discussed in the classroom. Okay. So, committee of creditors is formed. What is the committee of creditors? Simple. Lenders. Lenders are nothing but creditors. So, the committee of creditors will be formed. Now, it is the duty of the committee of creditors to decide whether they will go for liquidation. Understand the statement here. Whether they will go for liquidation or they will go for insolvency resolution. I can understand this. It is this particular committee of creditors which will decide whether we will go for liquidation or we will go for insolvency resolution. So on what basis they will decide? If they keep on receiving offers from other companies, for example, imagine there's a company ABC. The company ABC is under NCLT now, under insolvency resolution. Now, if many companies will come to let's say committee of creditors and offer to buy company ABC. If company, let's say Adani, Ambani, or Tata's, if they keep on approaching committee of creditors and say, I want to purchase this company ABC at 150 crore, 200 crore, 250 crore, then obviously the committee of creditors will look at going for insolvency resolution. But what if nobody wants to purchase ABC? There is no company which wants to purchase ABC. Or there are companies, but they are offering, let's say, 10 crore rupees, 5 crore rupees, when the company ABC owes the creditors 200 crores. At that point of time, remember this, at that point of time, committee of creditors will decide to go for liquidation. So the COC will take a decision, and there is no fixed parameter here from one type of account to another type of account. How they decide, whether they will decide with 66% or 75% of votes, it will vary. Don't get into complications. So the committee of creditors will decide what has to be done. Now, some of you ask, what if the committee of creditors is unable to decide? If the committee of creditors are unable to decide, then by default, we will go for liquidation. I will repeat the statement here. If the committee of creditors are unable to decide, in such cases, by default, we will go with liquidation process. We will go for liquidation. Now, imagine the committee of creditors will decide. They will give the decision to NCLT. NCLT will issue the order. NCLT will issue the order, right? So that is how, the insolvency or the bankruptcy process will be conducted under IBC. That is under the code. Okay. Let me give you the critical evaluation. Let me give you the critical evaluation of IBC, because I said it has been more than 5 to 6 years since we have implemented the IBC. Now, how understand this? What has been the impact of IBC? Let's understand that. Then, are there any limitations? Are there any problems to IBC? Let's understand that also. First one, it is a unified framework. It is a unified framework. Again, go back to the basic idea. Earlier, there were multiple laws which conducted insolvency resolution. We took the provisions from all of these laws, put them into one. That is a unified framework. One law, single law. That is a unified framework. Is it not a good point? Of course, yes. And because we have a single law now or unified framework, will it not promote ease of doing business? Yes. Third very important point. Earlier, remember this. Earlier, whenever we are conducting insolvency resolution, as per government data itself, it used to take 4.3 years on an average. 4.3 years. On an average, it used to take 4.3 years. Now, under the law, what we are saying is that the insolvency resolution process has to be completed in 330 days. Is it not a good outcome? Is it not an improvement? Of course, yes. Lesser time compared to earlier situation. And sir, you're writing the same thing. Not necessarily. I'll elaborate on it. Earlier, if you take 4.3 years, imagine here is a bank. The bank has given certain amount of loan to a company, and the company is unable to repay it. If the bank will take the route of insolvency resolution earlier, the amount would be recovered after 4 years. Let me make it very clear to you. The amount would be recovered after 4 years. Now, we want to do it within 330 days. We want to reduce the time period to 330 days. Now, you tell me you're a bank. You tell me you're a bank. You want to recollect money. Would you prefer more than 4 years or 330 days? You're a bank. You want to recollect the money. You want the process to be over. Will the time 4 years or 330 days, will that help you? Obviously, this will help you. Why? Sooner you're able to recollect, sooner you'll be able to lend money. I understand this. Circulation of credit has to happen. Sooner you're able to recollect the money, sooner you'll be able to lend the money in the market. So whenever the time taken is much lesser compared to earlier situation, banks will be able to recover money and lend the money all over again. That is the important outcome. It will provide the power to the creditors. Come to the point here. It will provide the power to the creditors. I've written two terms here: secured and unsecured. Secured and unsecured. Yesterday we have discussed secured and unsecured. Yes or no? Let me know. In fact, I've given examples also. Yesterday we have discussed secured and unsecured. Right? Some people are there. They'll always say no. You can't help. You can't help. Right? We have discussed secured and unsecured. So in what context? Secured bonds, unsecured bonds, additional tier 1 bonds, tier 2 bonds. These are unsecured. In fact, it is there in the slide. Please have a look at it. The moment I ask, I know there are certain people who already have a ready-made answer. No, sir. No, you did not discuss it. Right? Because they have that particular tendency. But I've discussed it. I know it. What do you mean by secured? Whenever a lender is there, they will provide the loan, collect the security. These are secured lenders, secured creditors. Right? Collateral. Correct. Absolutely correct. Collateral is provided. Unsecured means they will provide the loans without collecting any security. These are unsecured. So understand the logic here. Earlier, what used to happen is, imagine there is an unsecured lender. Sir, is there anybody who is unsecured lender? I'll give an example. NBFCs, non-banking financial companies. Today we'll discuss about this. Don't worry. NBFCs generally provide unsecured loans. Now, many of you will simply say, sir, NBFCs, if they provide unsecured loans, are they not taking a higher risk? Yes, they are taking a higher risk. That is the reason the rate of interest charged by NBFCs is higher. Right? Basic concept. Right? NBFCs are providing unsecured loans, and the rate of interest charged is higher. So earlier, what used to happen? Understand this. I'll give you one more example before going forward, so that you are able to understand this very easily. Follow this carefully. I'll ask a question after that. Imagine I'm a raw material supplier to you. I am a raw material supplier to you. Now, what I will do is, I will supply raw material worth 2 lakh rupees today. Here is A, that is me, and here is B, that is you. You are a company, and I've supplied a raw material to you. Generally, what happens is, you will not pay the amount today itself. You will not pay the amount today itself. That doesn't happen in the system. What you will do is, you will say, okay, right, supply the raw material today. I will pay the 2 lakh rupees after 60 days. You will give the money, no doubt. You will give the money, but after 60 days, after 90 days, etc. Now, let me ask you a very simple question. Let me see, are you interpreting this correctly or not? Now, tell me, the question is very simple. If I supply the raw material or a good worth 2 lakh rupees to you today, and you pay the amount to me after 60 days, is it okay if I say that I am giving you a loan of 2 lakh rupees? Let me know if this is very, very difficult to understand. Right? I'm giving you a loan of 2 lakh rupees. Of course, yes, it is as good as saying I am giving you a loan of 2 lakh rupees. Right? There is a concept credit. You purchase today, but you will repay the amount later. So, very difficult to understand. You have seen credit cards. You are using credit cards. What is the concept of credit card? The bank is giving a loan to you. Very simple. The bank is giving a loan to you. In credit card, what happens? What happens in a credit card? Today, you will purchase a product and you will pay the money to the bank after, let's say, 15 days. After, right, 40 days. Again, based on your capability, based on, right, due date, etc., etc. Is it not a loan? Exactly, yes. But is the bank taking asset from you? Is the bank coming, right, before you swipe like this, the bank manager will come in front of you and he'll say, right, you're swiping, you're using credit card, give me your documents, give me your housing documents. Do you think they do that? No. Apply the same logic here also. If I'm giving you a raw material and you will pay me after 2 months, do I come to your company and say, okay, you'll pay after 60 days. Then till 60 days, I will keep your machine. I will take your machine, keep the machine with myself. Do you think that is how the market works? Absolutely no. Now, is it okay if I say in this example that I've given, A is an unsecured creditor? In this example that I've given, A is an unsecured creditor. Right? A is unsecured creditor. Yes, A is an unsecured creditor. Now, what is the advantage here? Advantage is, earlier what used to happen was, imagine I supplied raw material to you. After 2 months, you did not repay. I was asked to go to civil court. I would be going to civil court, file a complaint against you. And you know how the civil courts actually function in India. How quickly they will resolve all of these particular issues. Now, what is happening? Understand this very carefully. Now, what is happening? That's the best part of IBC. You are the company owner. I have supplied raw material to you. Yes, it is an unsecured loan. You have not repaid after 60 days. I will go to NCLT, file a complaint against you. I understand. I will go to NCLT, file a complaint against you. Now, tell me, can you lose the ownership of company because of this? I understand this. Can you end up losing the ownership of your company? Or if somebody says no, why no? What are you following? What has happened until now? What has happened until now? Right? If I file complaint against you, committee of creditors will decide, should we, right, take away the company, right, close it, or should we sell it to somebody else? Right? But please follow what is happening in the discussion. Right? I don't know where is your focus. Follow what I'm discussing. So already we have discussed. That's the reason I've come to the positive aspects of it. So if I go to NCLT, file an application against you. NCLT will recognize the application. Now they will appoint committee of creditors. You might end up losing the ownership of the company. Earlier, this was not happening. Earlier, you also know it. Right? You knew it that I would have to be forced to go to civil court. You will say, you want to file complaint. Please go to civil court. File an application there and see, it will take 8 years. It will take 10 years, etc. Right? So earlier that used to happen. Now, no. Now this is not going to happen. You will file a complaint under NCLT and the owner of the company will end up losing ownership. There is a fear. There is a concern amongst the owners of the company. Now, if these company owners are concerned about it, Tell me, will their attitude change or they will have the same attitude? Attitude in the sense, in terms of repayment. In terms of repayment, will they change their attitude to make the prompt payment to you, or they'll be the same? No, I will not pay. What you will do? Will they have the same attitude? No, that is the biggest outcome. Because of insolvency and bankruptcy code, now the attitude of the borrowers, attitude of the company has actually changed. Because they know that if I don't repay, irrespective of whether it is a secured creditor or unsecured creditor, they will file an application. And if the process is started, I will not have any option. They might close the company. They might sell it to somebody else. Right? That is the biggest takeaway under the insolvency and bankruptcy code. But how can the system be perfect? How it can be perfect? There has to be certain issues here. Now have a look at this. Right? What are the concerns? Right? What are the concerns here? First one, the time taken for accepting and admitting applications is higher. Ideally, right? If you remember, ideally, how many days should the NCLT take here? 14 days. Okay, ideally, right? They should take 14 days, right, to either accept the application or reject the application. As per the law, they are supposed to do it within that. But again, apply the same logic. If the number of NCLT benches are lower and if the number of applications are very high, what do you think will happen? You already know the answer. If the number of benches are lower and the number of applications are very, very high, will they be able to do it within 14 days? Very difficult. And that is the precise reason there are a lot of applications which will keep on pending despite the number of 14 days getting exhausted. What is the problem with that? What is the problem if you don't either accept or reject in 14 days? If the step 1 will be delayed, I will write numbers. If the step 1 is delayed, what will happen to remaining steps? If the step 1 is delayed, what will happen to remaining steps? The whole process will get delayed. Right? So that is one very important problem. One very important issue that has been flagged. Second, actual time taken for the resolution is not 330 days. It is more than 330 days. Ideally, we should finish in 330, but it is taking more than 330. So why it is taking more than 330? Come to step number 3. Focus on step number 3 here. Come to step number 3. Here is a committee of creditors. Committee of creditors generally consists of secured creditors. Remember this. Committee of creditors generally consists of secured creditors. Now what happens is, imagine there are 4 creditors, A, B, C, D. 4 people who are given loan. Now if 2 people want to go for liquidation, remaining 2 want to go for, let's say, insolvency resolution, there is always a deadlock. They are fighting with each other. That might cause a delay in the process. Otherwise also, there is one more outcome here. Follow this very carefully. Imagine one of the creditor, right, the A creditor will go to High Court, file an application against the company. I'll repeat the statement. One of the creditors, that is, let's say A, will go to High Court and file an application. Now you tell me, if there is a pendence of insolvency resolution in the NCLT and there's a case against the same company in the High Court, which one will be given preference? It will be the High Court case. Before you start making a mistake, it will be the High Court case. Now if the High Court takes up the case, what will happen to the process? They will ask the process to be stopped. They will simply say, let's clear the case first here in the High Court, then let me take up the insolvency resolution in the IBC. But beyond that also, even if you don't apply the logic, beyond that also, let me ask you a simple question. Imagine here is the company ABC. You want to purchase the company ABC under NCLT, under the process. But now you come to know that there is a case against the company ABC which is already pending in the High Court. How many of you will have the courage of investing and purchasing the company ABC even after that? Let me know. How many of you will have that courage? Who will say, doesn't matter, right? Doesn't matter, right? I will go to the IBC and purchase, right, this particular company, right? No, none of you will do that, right? So that is the reason what will happen is the whole process gets delayed. Prakhar, my dear, already I've written the full forms. I don't know where were you. I've already written the full forms. For example, what is the full form of DRT? Ask the faculty to write the full form of the DRT. What is this, my dear? What is this? What is the full form of NCLT? Ask the faculty to write the full form of NCLT. Already I've written. Please follow what I'm discussing carefully. Please follow, right? I make it a point that if there's a short form, I will write it. And in fact, I will tell you, please make a note of this because I will use the short form later. You will complain that I've not written the short form. Please follow. Okay, now have a look at this. One is the time taken for accepting is more than 14. Actual time taken for resolution is higher. Most of the cases are going through liquidation. Is it a problem? Let me know. Is it a problem? Right? Is it a problem that most of the cases are going through liquidation, not through, right, insolvency resolution? Of course, yes. Right? Of course, yes. It is a problem. 2 people said no, it is not a problem. Right? Then the whole circus is already over. Now you're asking me why it is not a problem. I hope you remember this particular picture. I hope you remember that. If you simply close the company, supplies in the market will come down. Right? You are creating unemployment. And that is the outcome of liquidation. That is the outcome of liquidation. Production will be affected. Right? The whole GDP cycle would be affected. And finally, recovery rates are very low. Recovery rates are very, very low. What do you mean by recovery rates? Have a look at this. I'll take the same example. Sir, which example are you talking of? Can you see the black marker now? I'm using the black marker. I'm taking this particular example. Here is a bank which has given loan to a company. And imagine the bank is supposed to recollect 120 crore. The total amount of money that the bank is supposed to recollect is 120 crore rupees. But when they will sell the company to another company in the market, under IBC of course, when they will sell it to another company, they are able to recollect only 40 crore rupees. Sir, why? Why they are able to recollect 40 crore? Let me ask you a very simple question. Imagine I'm a bank. I will take a company, approach you, you are the buyer now. I will say, please purchase this company. This company owes me 120 crores. Please purchase it. Now you simply tell me, will you pay 120 crore rupees for the company or lesser than 120 crore? It should make sense, by the way. Will you pay 120 crore or less than 120 crore? Or right, anybody who is there, sir, I will pay more than 120 crore rupees. Obviously, you will decide to pay much lesser than that. Why? You know that the bank is selling an asset which is not performing. The company has incurred losses, etc. Why will you pay 120 for that? Why will you pay? Obviously, you'll say, no, I will not pay 120, I will pay 60 crore. I will give you 40 crore. If you want, sell it. Otherwise, liquidate it. Right? So imagine the bank is supposed to recollect 120, but the buyer will pay only 40. What is the recovery? Can I simply say recovery is 33%? So now 33%, calculate, you'll understand. Can I simply say recovery rate is 33%, 40 divided by 120, by the way. 40 divided by 120, recovery rate is only 1/3. So finally, have a look at the problem here. The recovery rates under IBC are lower, right? Are lower, that is also a concern. Right? So this is the discussion regarding IBC. One reform. Second, very important reform, current affairs, NARCL, National Asset Reconstruction Company Limited. NARCL, National Asset Reconstruction Company Limited. Now, what is this National Asset Reconstruction Company? Let me start with the basic idea here. Asset Reconstruction Company. Right, let me start with the basic concept. Asset Reconstruction Company. Now, I'll write a short form here. Right, don't say, sir, you're using short form without writing the long form. Asset Reconstruction Company, ARC. What is this ARC? Let's start. What is this ARC? Let's start the process here. Imagine here is a bank. Imagine here is a bank. Bank has given loan to a company. The company doesn't repay. Company will default. Now, what the bank will do is they will sell this company to ARC. They will sell or they will give this particular company to an institution called as ARC. Now, the ARC will sell it to a buyer in the market, collect the money and transfer the money and impose certain charges or on this. I will repeat the process. Follow the process carefully. First step, bank will give the loan to a company. Company doesn't repay. Second step, now the company will be sold to ARC, Asset Reconstruction Company. Now, what ARC does is it will find a buyer, sell the company to the buyer, collect the money and transfer the money to the bank, of course, collect certain charges. This is the role of Asset Reconstruction Company. ARCs are a type of financial institutions which are involved in disposing of NPAs. I'll repeat the statement. What is an ARC? These are type of institutions which are present, which will help in disposing. Disposing means selling, the assets, that is the non-performing assets in the system. And please remember this, ARC as a concept is not new. ARC as a concept is not new. In India, there are more than 25 ARCs. In fact, in India, there are more than 25 ARCs. Now, some of you are asking it. The question is very valid. The question is, sir, if there is already an ARC which is selling off the non-performing assets of the company, what was the need to have IBC? Let me explain it. If there is an ARC already, why do we have IBC now? First and foremost, remember this. ARCs in India are very, very old institutions. These have been set up for more than 2 decades, more than 20 years in India. Whereas IBC has started functioning post 2016 in India. So between ARC and IBC, which is old? I have to understand this. Between ARC and IBC, which is older, it is ARC which are older institutions. So if you already have an ARC, what is the point of having an IBC? Reason is, we had ARC, even today we have ARCs, but the recovery rates are very, very poor. Recovery rates are very, very low. How low? 5%, 6%, 7%, etc. So understand this carefully. We have a system of ARCs where the banks are selling the assets and getting the money, getting the recovery, but the recovery rates are very low. So what do you think? Are the ARCs working efficiently or inefficiently? Is the ARC system working efficiently or inefficiently? Answer is there right in front of your face. ARC is not working efficiently. So what Government of India decided was, somebody says efficiently, great. Right? What Government of India did was, they introduced a new system. And if you remember earlier, I told you, under IBC, the recovery rates are somewhere around 30%. Under IBC, the recovery rates are around 30%. You tell me again, apply logic, you'll understand. You have ARCs where you have recovery rate of around 5%, and you have IBC where the recovery rate is 30%. Where would you like to sell your asset? I can understand this. Where would you like to sell your asset? IBC. Check the newspaper. Please check the newspapers. Right? Where do you think the banks are taking the companies now in case of non-payment? Are they approaching ARCs or are they simply dragging the companies to IBC? If you read the newspapers, you would have known it. Right? This company has been taken to IBC. This company has been taken to IBC, etc., etc., etc. So there was a system of ARC, was not functioning very well. Even today, ARCs are there. They are part of the system. But the banks are choosing insolvency and bankruptcy code now. Why? The recovery rates are much better. Recovery rates are much better. Right? What is the full form of IBC? Insolvency and bankruptcy code. Right? Insolvency and bankruptcy code. Why don't we end ARC? Right? That has to be decided by the government or even by RBI. They have given the licenses. These are working. And in fact, beyond this, there are multiple other functions of the ARCs. Don't worry. So have a look at this. First point. What is NARCL? National Asset Reconstruction Company Limited. NARCL. Now, second question, which most of you raise is, sir, what is this NARCL? What is this idea of NARCL? I'll explain. Please wait. Now, the government of India felt that there are certain NPAs which are called as legacy NPAs. Understand this particular term. There are certain NPAs which are called as legacy NPAs. What is this idea of a legacy NPA? Understand the term carefully. It's not very difficult. Legacy NPAs means those accounts which have become NPAs for very, very longer duration now. I will repeat the statement. What do you mean by legacy NPAs? Those loan accounts which have become NPAs for many, many years now. These have become NPAs for 3 years, 4 years, 5 years, etc., etc. Right? So whenever the NPAs of a longer duration are there in the banking system, these are called as legacy NPAs. While I'm explaining this, make a note of this. NARCL has been set up to address a legacy NPA issue. I will repeat the statement. The NARCL has been established to address legacy NPA issue. Right? Why? Sir, why legacy NPAs? Why not the new NPA? If there is a new NPA, the bank can simply go to IBC, get the resolution done. Have you understand this? Right? If there is an NPA which is created right now, you can go to IBC, file an application, get the insolvency resolution done. But what if there is an NPA sitting in a balance sheet for 5 years, 6 years, 8 years like this? What are you supposed to do with that? IBC will not take it now. What are you supposed to do with that? That is the precise reason NARCL has been established. Right? I understand the difference between IBC and NARCL. Don't be confused. Each one of the systems has their own utility like this. Now let me ask you a very simple question. Imagine there are 10 legacy NPAs. Imagine there are 10 legacy NPAs. And the NARCL has cleared all the 10 the legacy NPAs. Now, do you think there is any other work for NARCL? I'll repeat the statement. Right? Imagine there are 10 legacy NPAs, and all the 10 legacy NPAs have been resolved by the NARCL. Now, do you think there is any other work for NARCL? What is the other work for NARCL? There is no other work for NARCL. So, what if there is a new NPA? If there is a new NPA, you take it to IBC. You simply take it to IBC. That is the reason. Remember this. NARCL has been set up for 5 years. NARCL has been established for a duration of 5 years. Because once these particular legacy NPAs are resolved, there is no legacy NPA. There are no old NPAs. If there is an NPA in the system, you can take it to IBC now. So what is the work for NARCL now? No work. That is the precise reason NARCL has been proposed for 5 years. Done? Let me start. NARCL, 51% will be owned by public sector bank. I'll repeat. NARCL, 51% will be owned by PSB. PSB, public sector bank. Now there are two entities here. Follow this carefully. There are two entities. One is NARCL. Second one is IDRC. There are two entities here. One is NARCL. Second one is IDRC. What is IDRC? Indian Debt Resolution Company. What is the role? We'll understand it. Just give me a minute. The government of India has cleared guarantees worth 30,600 crores, which are contingent liabilities. I'll explain that also. Wait. The bad bank. What is a bad bank here? Let me explain. What is a bad bank? A bad bank is a financial institution or a bank which will purchase the bad assets or the NPAs of the banking sector. Simple. What is a bad bank? NARCL is a bad bank only. Why this is called as a bad bank? Right? Imagine there are 5 banks. 1, 2, 3, 4, 5. Each of the 5 banks have NPAs, non-performing asset. Rather than the bank being concerned about the NPAs, trying to resolve them, etc., they will sell these NPAs to one more bank. That is called as a bad bank. So what is the role of the bad bank? The bad bank will purchase the NPAs of the other banks so that the banks can focus on their main work, that is basically lending, borrowing, etc. Right? So NARCL is a bad bank. So NARCL is expected to resolve NPAs to the tune of 2 lakh crore rupees. To the tune of 2 lakh crore rupees. And to begin with, we will focus on the larger value loans, that is the assets whose value is more than 500 crore rupees. I'll repeat it. Right? The bad bank will resolve the loans or the NPAs, legacy NPAs, to the extent of 2 lakh crore rupees. And to begin with, we will focus on the bigger assets of, let's say, 500 crore rupee plus. So why should we focus on bigger loans? Let me ask a very simple question. Imagine you're a bank. You have 3 NPAs, A, B, and C. You're a bank. You have 3 NPAs, A, B, and C. The value of A is 1 crore. Value of B is, let's say, 10 crore. And the value of C is, let's say, 200 crore rupees. Now answer this. Imagine you're a bank. Which of the 3 NPAs you want the first resolution? Have you understand? In which of the 3 NPAs you want the resolution to be done first? Does it make sense to say 3 or C? Have you understand? Does it make sense when you say, sir, C? Why? Sir, it's a very big value asset. I will recover, right? Let's say even if I recover 80 crore rupees, yes, right? It's 80 crore. Actual value is 200, but I will recover 80 crore, which is much better than the earlier loans or the remaining 2 loans. That is the basic idea. We'll focus on bigger value loans first, then we'll try to resolve remaining ones. Now, how this will work? What is this contingent liability? Why there is IDRC? Let me explain the process to you. Is the flowchart visible to all of you? Let me know. Is the flowchart visible to all of you? And to everyone here, when I say I will discuss it later, have the patience to wait. It is a request. Have the patience to wait. I said, what is contingent liability? I will explain. What is the role of IDRC? I said, I will explain. Please wait. It's not as if I'm going to shut it down and run away from you. I am there here. I will address it. Please wait. So have a look at the step-by-step process here. Here is a bank. The bank will sell the asset, that is NPA, to NARCL. The bank will sell the asset to NARCL. Step 1. Now imagine NARCL, imagine this. The value of the asset is 100 crore rupees, but NARCL will tell the bank, I will not be able to recover 100 crore. Right? I hope it makes sense to you. The bank expects, right, money, how much? 100 crore. That is the value of the asset. But the NARCL simply says, no, I will not be able to recover 100 crores to you. I will recover, let's say, 40 crore rupees. I will sell this asset and give you 40 crore rupees. Step 2. Now, NARCL, there is one more operational entity in the system called as IDRC. Follow this. NARCL, there is one more operational entity, IDRC. So, long form of IDRC. It is written. Okay. So, there is one more operational entity, IDRC. Now, what NARCL will simply do is transfer this particular asset to IDRC. So, why is it transferring? Why cannot NARCL directly sell it? Because of RBI guidelines. RBI clarified that when you have these entities, that is, let's say, NARCL, I will not allow NARCL to purchase as well as sell the asset. Why? As per the Banking Regulation Act, BRA, such entity is not allowed to do both of the work. Again, don't enter into all of these technicalities. In that case, you'll have to understand what is a principal, what is an agent, what is principal-agent relationship, etc. Don't get into this. Just follow the sequence here. So, NARCL will purchase the asset from the bank and, right, they will transfer it to IDRC, and now the IDRC will sell it to a buyer, collect the money. IDRC will sell it to a buyer and collect the money. Now, let's say hypothetically, they have collected 30 crore rupees. IDRC has sold the asset to the buyer. They have collected 30 crore rupees. IDRC will transfer the 30 crore rupees. But now look at the problem. NARCL has promised the bank that I will give you 40 crore. But NARCL now has got how much money? How much money has been recovered? 30 crore rupee has been recovered. Okay. Now, don't you think 40 and 30 are one and the same? Do you think 40 and 30 are one and the same? No. There is a gap of 10 crore rupees. There is a gap of 10 crore rupees. Now, go back to the point. Government of India has set up a fund worth 30,600 crore rupees. That's the reason I said, wait, I'll explain it. Government of India has set up a fund called as a fund where they have kept 30,600 crore. From this fund, 10 crore rupee will be taken. 30 crore is already there. So 30 plus 10, totally 40 crore given to bank now. Right? Is it okay? Right? Is it okay? How do you use the fund? Why the 30,600 crore rupee? Is it fine with you people? Right? So IDRC will sell the asset, collect the money, and if there's a shortfall, right, they will get the money from the Government of India fund and transfer the 40 crore rupees to the bank. Now, for all of this, obviously, whoever is involved, IDRC, NARCL, etc., they will impose a certain charges, collect the money from the bank. They will impose charges and collect the money. This is how the system is supposed to work under NARCL now. What is the critical evaluation of this? What are the benefits? Right? What are the issues, etc.? Now, I generally get this particular doubt. Sir, what if it is sold at 50 crore? You said 40 crore rupees. What if it is sold at 50 crore? You tell me an example where it has happened. Don't you think NARCL, which consists of experts, cannot find out the market value or at what value the buyer will purchase it? Don't you think the experts don't have that knowledge? Right? Of course, yes. I'll tell you an example also. Generally, you try to find out a loophole in the system. I'll tell you an example. Read today's newspaper. My sincere suggestion to you people is, please read today's newspaper. Hindu, by the way. Right? Of course, I want you to read beyond Hindu also, but again, right, many of you will say, sir, you'll keep on telling who will read it. So at least read Hindu newspaper. What did I tell you yesterday? If you recollect it regarding inflation, what did I tell you yesterday? If you remember, I told you that inflation rate for the last month will be more than 7%. It will be more than 6%. At least I told you that. Yes or no? Let me know. Right? Some will say, no, sir, you're lying. You're making it up. You check it. I said inflation rate will be more than 6%, guaranteed. And I told you the fact also. Why I'm telling that? I told you Reserve Bank of India has already stated that inflation will be beyond 6%. Now you will say, how do they come to know? That is their duty. That is their duty. And you check today's inflation rate, that is today's newspaper, inflation rate is more than 7%. And if you read the article, you will realize it. You will realize whatever we're discussing in the classroom is there in the article. Are they discussing food inflation? Just check the newspaper. Are they talking about retail inflation? Are they talking about urban inflation, rural inflation? You check it, you will realize. Are they talking about the base effect? You check, you will realize. And one point, yesterday I told you that, and again, I am not an expert here. If you have the habit of reading the newspapers and looking at the market, you can make the same conclusion also. You read that article, there will be one point. There will be one point. In fact, I told you that yesterday. The point was, with this particular inflation rate, now there is an expectation that RBI will increase the repo rate by 35 basis points or 50 basis points. Right? They have given it. You check it, you will realize it. So whatever is happening in the current affairs, please try to connect it. Connect the dots, you will understand it. Okay, let me go forward. NARCL. Right, NARCL. What is the critical evaluation? What is the good aspect? What is the good aspect related to this? What are we trying to achieve? One, the NPAs, right, will be taken away from the banking sector and will be given to one authority and they will sell it, give the money. Now start answering. Don't you think the stress on the banking sector will come down? If you say no, tell me what is the reason. Don't simply say no. What is the reason? Also, you tell me so that I can address it. I'm saying you are a bank. I'm NARCL. We will take the bad assets or let's say the NPS from you. I will sell it and I will give you recovery. Will the stress on you come down? Yes. Will your balance sheet become much more clean now? Right? Will your financials become much more clean? Of course, yes. Can you focus on your main activity? What is your main activity? Giving loans, collection of deposits. Will you be able to focus on that? Of course, yes. Right? These are some of the advantages. Will it promote more and more loans, credit issuance in the market because the banks are able to focus, get the recovery from someone else, etc. Right? So have a look at this. There is a new entity. We are going to transfer the NPAs so the bank doesn't have to be concerned. The bank can focus on their main motive, collection of deposit, issuing of loans. The balance sheet of the banks will become clean. Now they can borrow from market. They can show to investors that, see, look at my balance sheet. Right? NPAs have come down. Right? Give me money. Right? Invest in the form of deposits, etc., etc. And initially the focus of NARCL will be to resolve a bigger value loan so that the banks will be able to have a recovery of bigger NPAs rather than focusing on very, very small NPAs like this. That is the good aspect related to the NARCL. But again, how can a system be perfect? There has to be a critical evaluation of this. What's the critical evaluation? This is a reform, no doubt, good reform. Before you start accusing me, I'm saying this is a good reform. But this is taking care of the problem. The problem has already occurred. It is a reform which is reactive, not proactive. That is like a very simple example. Right? Again, just an example. There is corona. You go outside, you get corona, you get treatment. But what is better? Not going out or preventing corona or getting corona then getting treated. Have you understand this? Right? Have you understand? If you're wearing mask carefully, if you're using gloves, if you're sanitizing, don't you think a prevention is always better than cure? I'm not saying having a cure is bad. I am saying that prevention is better than cure. So NARCL is a cure. But why are we not focusing more and more and ensuring that creation of bad loans will come down? That should be the basic objective here. And that is a criticism. That's a concern here. No way am I saying that NARCL reform is bad. But my argument is we should focus more and ensure that the loans will not become NPAs. That is the criticism. Second, the government is providing the guarantees. Here is a bank. There is an NPA. They will sell it or they will give it to NARCL. Now NARCL will transfer it to IDRC, which will collect the money, give it to NARCL and give it back to bank. And if the recovery rates are low, understand this, if the recovery rate is low, there is a guarantee by the government. Government is giving a guarantee. Now you tell me, right, you are a bank manager. Now you know that even if there is an NPA, right, government will give the guarantees, there is a NARCL system. Will you become more complacent or will you become very careful with respect to whom you are giving loans? Have you understand? Will you become more complacent or you'll be very careful as to whom you are giving loans? You'll become more careful if there is accountability on you. Have you understand this? Right? Some of you are answering very, very dangerously. Right? So if you know that government will come to your assistance anyway, government will ensure that money will be given to you. Will you become more careful or more complacent? You'll become more complacent. That is the concern. Government again and again has been introducing these reforms, which might send a signal to the banks that even if we are not very careful, even if we are giving loan to Mr. Nirav Modi, Vijay Mallya, etc., which we already know these are dangerous, government will give us assistance. Government will help us, etc. Right? So this might make the banks much more complacent. That would lead to again creation of more NPAs. And finally, these are very old assets, 6-year, 7-year, 8-year old asset. Now, right, what is the guarantee? What is the guarantee that there will be buyers of it? I don't think it might so happen that there are no buyers also. That is the argument here. So the arguments are simple. One, this might make the system much more complacent. This is a reform which will address the problem, but we should implement more reforms so that the problems are not created. And the third one is basically these are very old loans, very, very old loans. And who will buy these? That is doubtful. Now let me go to the next concept. Cooperative banking structure. Cooperative banking structure. Now first and foremost, let's start with basics here. What is a cooperative? Cooperative is a group of 10 or more adults. Understand this carefully. Cooperative is a group of 10 or more adults. Adults means above the age of 18 years. Now, because these particular 10 or more adults have come together for a particular objective, for a common cause, they will group together, they will invest a certain amount of money, right? Pool together a certain amount of money and start this particular cooperative. Right? Is it okay? I'll repeat the statement. Right? I'll repeat the statement. What is a cooperative? It is a group of 10 or more people, right? That is above the age of 18 years, who have come together to achieve a common goal, to achieve a common objective. So, what could be a common objective? Let me take an example of cooperative and let me explain it to you. Have you heard of the company Amul? Right? Or brand Amul? Right? It's a brand. Company is Anand. Okay. So it's a brand. It's a brand name. Amul. Amul is a cooperative, by the way. Amul is a cooperative. I'll give you another example. Have you read about IFFCO anywhere? Let me check how many of you are reading newspapers. Have you read about IFFCO anywhere? Of course, yes, you should have read it. You must have read it. Sir, where? Urea, nano urea. If somebody says no, then it simply means you are not even reading Hindu. It simply means you are not even reading Hindu, right? Why? Last week Sunday, not the recent one, the week before that, there was an article on nano urea and IFFCO was quoted there. IFFCO, look at the long form, you realize it is a cooperative. IFFCO is a cooperative. So understand that there are multiple cooperatives, not just one. There are thousands of cooperatives in India. But what is the idea? Right? We come together, that is 10 or more people come together, we will pull in certain amount of money and we want to achieve certain objective. What could be the objective? We want to purchase the goods from the farmers, sell them. We want to purchase the milk and we want to package and sell it. Right? We want to produce fertilizers and sell it. We want to set up a housing society and sell the housing units. We want to procure, let's say, coir products, jute products, or textiles, khadi, etc., and sell them. So the idea is very simple here. Cooperative simply means group of 10 or more people who are above the age of 18 years who have come together to achieve a common objective for a common cause. Now focus on cooperative banking. Focus on cooperative banking. Now what is this cooperative banking? Cooperative banking is divided into two parts. Cooperative banking is divided into two parts. One is urban, second one is rural. Urban cooperative banks, right? Rural cooperative banks. Urban cooperative banks are further divided into two parts, scheduled and non-scheduled. Okay, scheduled and non-scheduled. What do you mean by scheduled and non-scheduled? RBI Act of 1934, second schedule. Right? We have been discussing this again and again. Do not forget it. So we have division like this: scheduled urban cooperative bank, non-scheduled urban cooperative bank. Now, what do you mean by the multi-state and single state here? Imagine you start a cooperative. Right? 10 of you come together, pool in the money, and you start a cooperative. And if you work in a single state, if you work in the same state like this, you are referred as a single state cooperative. And always remember this: if you talk about a single state cooperative, the regulation of a single state cooperative comes under the respective state government. I'll repeat it. If you are a single state cooperative, then you are coming under the regulation of the same state government. Why? Remember this. Cooperative Act, right? Cooperative Act is passed by individual states. All the states in India have cooperative acts. But if you are a multi-state cooperative, you are present in more than one state, then the regulation of the cooperative will come with the central government. I'll connect it. I'll connect it to current affairs also. If you are a multi-state cooperative, then right, it will come under the regulation of the central government. So what is the current affairs here? Last week, the Minister for Cooperation, Mr. Amit Shah, has announced that Government of India will be setting two multi-state cooperatives. How many of you have read it? Let me know. Right? How many of you have read it? Let me know. Last week, the Minister of Cooperation, Mr. Amit Shah, has announced that the Government of India will be setting two multi-state cooperatives. Now, I hope you understand why they are announcing multi-state cooperatives. Logic is simple, because multi-state cooperatives will come under the regulation of central government. Multi-state means these are operating beyond one state. Let me give a current affairs example. You will quickly understand it. Punjab Maharashtra Cooperative Bank. I'm pretty sure all of you heard of the name of the PMC. Punjab Maharashtra Cooperative Bank. Right? Look at the name itself, you realize this is a cooperative bank which functions under multiple states, which works in multiple states. So multiple states, regulation comes under the central government, single state, regulations in the state government. Right? So Minister of Cooperation announced that they will be setting up the multi-state cooperatives under two sectors. Anybody, what are the two sectors? Let me see. Anybody, what are the two sectors? What are the two sectors? Anybody? I'm asking about this announcement. Right? Only one person has answered so far correctly. The seed sector and export sector. The seed sector and export sector. Okay. So, right, come back to the discussion here. Urban divided into scheduled and non-scheduled, single state, multi-state. Non-scheduled again divided into single state and multi-state. Right. This is the structure of urban cooperative banking. What about rural cooperative banking? Rural cooperative banking is divided into two components based on what kind of loans they provide. I repeat, rural cooperative banking are divided into two components like this based on what kind of loans they provide. Right. So, what do you mean by kind of loans here? I'll give a very, very short concept here. In detail, we'll look at it in agriculture sector. Follow the concept carefully. Whenever you talk about agriculture sector, the loans are given to the sector can be divided into three parts. The loans which are given to agriculture sector can be divided into three parts. One is short-term loan, medium-term loan, and the last one is long-term loan. Short-term loan, medium-term loan, long-term loan. Now, what do you mean by short, medium, and long? For what purposes? Don't worry, we'll discuss this in detail when I discuss agriculture credit. Right now, simply focus on this. Now, whenever you talk about short-term loans here, these are provided by rural cooperative institutions, rural cooperative banks. And whenever you talk about long-term loans, that is a medium as well as long-term loans, there is one more type of cooperative banking which will provide such loans. Is it clear to you? Right, let me know. Is it clear to you? Ajay, Shishu, Tarun, don't insert a concept of MSME sector here. Shishu, Kishore, Tarun is associated with the MSME sector. I am talking about agriculture sector. Right, focus on this. Right, so understand this. Short-term loans are given to agriculture sector. So this part of the cooperative banking will focus on short-term loans. Long-term loans and medium-term loans are given to agriculture sector. Right, it is this part of the cooperative bank which will provide such loans. So for what purpose do they take? Short-term loans to purchase fertilizer, seeds, etc. What about medium-term and long-term? You want to purchase one more land. You want to purchase a tractor. You want to dig up a well in the land, etc. These will generally fall under the medium and the long-term. So that is the basic idea. Short-term and long-term. And in short-term, there are three divisions again. The State Cooperative Bank, SCB. Second one is a DCCB, District Central Cooperative Bank, and the third one is a PACS, Primary Agriculture Credit Societies. I will underline or I will round up a term here. Have a look at this. I've rounded off one term. Have a look at this. Can you see the red color marker? Can you see the red color marker? Right, or a red color pen that I've used? What is the term I've rounded off? Societies. What does the meaning or what is the meaning of the societies? Is it a bank? Have you understand this? What is a society? It is a group. Simple. It is a group of 10 or more people. But is it a bank? No, it is not a bank. So remember this. I'll connect it to earlier points that we have discussed. There was a discussion on DICGC. I hope you remember the current affairs that I discussed there. DICGC. I'm writing at the extreme right corner now. I said DICGC does not provide the guarantee if the deposits are kept in the primary agriculture credit societies. Did I mention this or not? Let me know. In fact, it is written even in the slide. I stated that DICGC does not provide the guarantee of insurance to the deposits kept in the PACS. Why? It's a society. It's not a bank. Very simple. It's a society. It's not a bank. Right? Because it's a society, not a bank, you might collect the deposit, but you will not have insurance coverage from DICGC. So I'll repeat it again. Short term is divided to three parts: State Cooperative Bank, DCCB, and finally PACs, Primary Agriculture Credit Societies. Now, out of all the three, the most important pillar is the last one, PACs, Primary Agriculture Credit Societies. The PACs are involved in collection of deposits, giving loans, selling fertilizer, setting up warehousing or storage facility, etc. So PACs are not just connected to lending and borrowing. It is having wide variety of functions. They're involved in selling of fertilizer, selling of seeds, setting up warehousing, providing marketing facilities, etc. So the most important pillar is PACs, but the PAC is not a bank. Remember this. And the next one is long-term loans. In the context of long-term loans, we have two systems here. Right? I'll use a short form. Right? This is how I remember. You can make your own trick. The bigger one, that is at the state level, we have the authority, State Cooperative Agriculture, yes, Card B. This is how I remember. Yes, Card B. And the second one is P Card B. Again, I'm saying this is how I remember. Left to you, you make your own trick. Right? So yes, Card B doesn't involve itself in lending activity. It will oversee the functioning of P Card Bs, Primary Cooperative Agriculture and a Rural Development Bank. And what is the role of P Card B? They will give long-term loans, medium-term loans to agriculture sector. So this is a structure of cooperative. As far as I'm concerned, you don't have to mug up the structure, but at least glance through this. If they say multi-state, where does it fall? If they say rural cooperative, what does it mean? If they say PACS, what is the three-pillar structure, etc. Okay. Now, apart from this, what are the important points? The cooperative banking, understand this carefully. Generally, there is this argument of dual control or dual regulation. I'll explain this. Just give me a minute. There is always this argument of dual control or dual regulation. What is this dual control or dual regulation? Let me explain this. Follow the concept carefully. Don't be confused. So have a look at this. Imagine here is a cooperative. Multi-state, single state, don't worry. I said 10 or more people will come together who are adults, will put money and start a cooperative, either for milk or sugar, whatever it is, they have started a cooperative. And I said if it is a single state cooperative, it is the state government which will regulate. It is the state government which will regulate the cooperative. How does the state government regulate the cooperative? There is an authority, Registrar of Cooperative Societies. Registrar of Cooperative Societies. Every state government has a Registrar of Cooperative Societies. I'll use the short form now, RCS. So the state government will appoint an authority, Registrar of Cooperative Societies, and it is the duty of Registrar of Cooperative Societies to regulate the cooperative. But if it is a cooperative such as, let's say, a housing cooperative, a sugar cooperative, or a milk cooperative, there is no issue here. There is no issue. But what if this is a cooperative which is involved in banking? What if it is a cooperative which is involved in banking? Now tell me, who is the regulator of banking sector? That's a simple question. Right? Who is the regulator of the banking sector? Simple answer to that, RBI. Now understand the problem. It is a cooperative, it comes under the regulation of RCS. It is a banking unit, comes under the regulation of RBI. Can I call this as a dual regulation? Dual means two, by the way. Can I call this as a dual regulation? Yes, there is a problem of dual regulation. And please understand this. It has become very pertinent, right? A bigger problem in the recent days. Why? Understand the logic here. In the cooperatives, there is a concept of board of directors. There is a board. Right? Board of directors means the one who takes a decision, the one who will manage the cooperatives. The problem is, for appointment into the board like this, or the chairman, there are elections conducted. You must have heard of cooperative elections. Right? I'm pretty sure. Have you heard of cooperative society elections? Let me know if you have not heard of it. Right? Have you heard of cooperative society elections? Some of you are saying no. Right? Please keep on observing. Please keep on observing. You will come across these elections also. Sugar sector, there is an election within the cooperatives. Right? Housing sector, elections within the cooperatives. Right? Or let's say milk sector cooperative, there is an election. Competitive election is there. Why? These are people who have come together. They have set up. But who should be the managing director? I'm asking you a question. Right? Imagine 10 of you have come together. You have started a cooperative. But can you all the 10 people sit together every time and decide? Is it possible? Just apply the common sense. You will understand. So 10 people are there. It is very easy. I said 10 plus. What if 1,000 people are there? You want to call all the 1,000 people every day and keep on discussing, should we purchase the laptops or not? Should we open one more branch or not? Is it possible? No, it is not possible. So what will happen? All the 1,000 people will vote. They will appoint one person to oversee the function, to oversee the management, etc. So remember this. There is an element of elections within the cooperative. Now focus on the other side. Imagine there is a public sector bank. Is there any election to appoint a person to a public sector bank? Let me check. You want to appoint a chairman to public sector bank. Government of India will call you up today and say, there is a chairman election. Please vote. Do you think that is the process? No. Government will decide through a process who is the right person, who has the expertise to head public sector bank. Right? So understand the logic here. On one side, it's a cooperative. Elections are conducted. Right? It is regulated by Register of Cooperatives. And on the other side, it is a bank. Comes under the regulation of RBI. What is the problem? Problem is, generally, there is a lot of political influence in the cooperatives. I'll use certain names. Forget it after this. Don't use the names in the exams. Don't use these names. Have you heard of a very famous politician, Mr. Sharad Pawar? I'm pretty sure. Sharad Pawar. Or in the Uttar Pradesh, right, Mr. Shivpal Singh. Or, right, Home Minister, Mr. Amit Shah. All of these come from cooperatives only. Have you understand this? All of these come from cooperatives. They have fought cooperative elections. They have headed cooperatives. Now they are in a different position altogether. Now tell me, let's say having a person, again don't say, sir, you're insulting ABC. Forget about it. Imagine there is an election in the cooperative. One person has been appointed, right, because he was very much politically connected. He knew the people there, etc., etc., etc. But he doesn't have any banking expertise. No connection to banking sector. Tell me, is it good or bad for the cooperative? I have to understand. Is it good or bad for the cooperative bank? Of course, yes, there is a concern now. Why? The person doesn't have any knowledge of the bank. And the person is taking care of the operations of the cooperative bank. Don't you think? Right? If he's very well politically connected, he might start giving loan to his friends or her friends. They might end up giving loans to influential people in rural part of India. And what if they don't repay? Are you not playing with the money of the depositors? Of course, yes. So there is always a concern like this. There is always a concern like this. So that is the problem of dual regulation. Okay, that is the idea of dual regulation. What has been done? I will come to that. I'll come to that also. Just give me some time. So in 1966, Government of India issued a notification or an order and said, if a bank that is a cooperative bank has a paid up capital of more than 1 lakh rupees. Now many of you start typing, sir, what is paid up share capital? Please open yesterday's PPT. You will find the answer to that. Right? Please open yesterday's PPT. If I've not told it, let me know. If I've not told it, let me know. I'll explain it. But I'm pretty sure I've explained to you the concept of paid up share capital. I've told you that. So any cooperative bank which has a paid up share capital of let's say 1 lakh rupees or more were brought under Reserve Bank of India regulation. These are brought under Reserve Bank of India Reserve Bank of India regulation. Have a look at this. The Register of Cooperatives is responsible for overseeing the administration of the cooperatives. The banking functions will be regulated by Reserve Bank of India. Right? The banking regulation will be regulated by a banking activity will be regulated by Reserve Bank of India. Done. Now, what is the current affairs? What is the current affairs? Current affairs is this. There was a dual regulation. Right? As a result of this, there were certain banks, that is the cooperative banks, which collected, right, which collected the deposits, gave the loans, incurred losses. Many borrowers or many depositors suffered because of this. The best example for this is Punjab Maharashtra Cooperative Bank. Now, many of you simply say, sir, understand this, if the bank is a cooperative bank, and if I know that there is a risk in keeping deposits in the cooperative bank, why people keep money? Why people keep money in the cooperative bank? Answer is very simple. One, tell me, right? You frankly answer to me. How many of you knew until now what is the idea of a cooperative bank? How different it is compared to a public sector bank? I have to understand this. Until now, how many of you actually knew the difference between a public sector bank such as SBI and a cooperative bank which is there in your own locality? Many of you did not know this. Or let's say some of you did not know this. Now, some of you will say, sir, why did you say some of? No, all of us knew it. Great. All of you know it. But can you attribute the same to all the people in India? Can you attribute the same thing to all the people in India? No, people do not understand the difference between a cooperative bank and a public sector bank. Second, even if they knew, they will go to cooperative banks for a very simple reason. Interest rate is higher there. The cooperative banks will offer a higher interest rate to you. That is the precise reason you will go to those particular banks. Now, very recent reform. I've written UCB here. UCB stands for Urban Cooperative Bank. Urban Cooperative Bank. Now, what are the very recent reforms? We'll discuss this, then we will take a break. Now, although I've written UCB here, please make a note of this. The recent changes or the reforms that I'm going to discuss now is not just applicable to one cooperative bank. It is applicable to even rural cooperative banks also. It is applicable to even rural cooperative banks. It is applicable to both UCB as well as RCB. Right? Applicable to both UCB as well as RCB. Now, what are the reforms? Let's start with the basics here. Just go back some time ago. We have discussed this. In case of cooperative banks, elections are conducted. And I said a board of directors is appointed. Now, what if these people do not have the knowledge of banking? What if the people do not have the knowledge of banking? Don't you think that will create problem for a bank? Because they don't know they do not know how the banking sector works. What kind of loans we are supposed to provide? How we are supposed to recollect? To whom we are supposed to give a loan? If they do not have the right expertise, then you're playing with depositors' money. So what Government of India did was it amended Banking Regulation Act. Remember this. It amended Banking Regulation Act of 1949. I'll repeat it. Government of India in 2020 amended Banking Regulation Act 1949. In which year they amended this? In 2020. In 2020 they amended this particular act and gave more powers, more regulatory powers to RBI. The RBI has been given more and more regulatory powers now. What kind of powers? Follow this very carefully. The board of directors is there, but the board of directors doesn't have, let's say, banking expertise. They do not know how the bank is supposed to work, etc. like this. Now, what I tells all these banks, that is UCB as well as RCB, is that they will also have to have a board of management. Understand this very carefully. There is a board of directors, but it is appointed through elections by cooperative banks. But what if they don't have banking knowledge? That is dangerous. So what RBI now mandates is every one of these particular cooperative banks will have to have BOM, board of management. And in the board of management, there have to be at least 3 members, and at least 5 members, and maximum 12 members. In the board of management, there has to be at least 5, maximum 12. And what is the role of the board of the management? Whatever is the banking activity of this bank. I have to understand this. It is a cooperative bank, no doubt. It's a cooperative as well as a bank. The administration side, the board of management will not interfere. What do you mean by administration side? How many buildings are supposed to be there? Right? What is the process of appointing people? Administration side, the board of management will not interfere. But if this cooperative bank is giving loans, it is collecting loans, it is collecting deposits, is it classifying non-performing assets? These are banking activities. So the board of management will have oversight. Oversight means it will oversee the banking related activities of these particular cooperative banks. Very, very important. Please be very careful. Why this is important? Board of directors may or may not have the knowledge of banking. And if they start, right, basically, let's say, operating a bank, they will end up making a lot of mistakes. The bank might end up incurring losses. You are playing with the deposits of the people. So the RBI says, appoint a board of management, which will be headed by a MD or CEO. And this will be the duty of the board of management. And please understand, although the bank is supposed to appoint these people, RBI simply says, if I see that if you are appointing a person who doesn't have any expertise in the banking, I will not allow the appointment. I will not approve the appointment. Right? I'll repeat it. Board of management has to be appointed. They will oversee the banking activities. And if anybody is appointed who is not an expert, who doesn't have relevant experience, who is well connected but not suited for the job, then RBI says, I will not approve the appointment. I will ask you to change the person. And if let's say a politician's person is appointed, RBI simply says, no, I will not approve. A well-connected person is appointed. His salary is very high. RBI says, cut down the salary, right, etc. like this. So that overseeing right function will be given to RBI. Reserve Bank of India is also empowered to board of directors. If a UCB or an RCB board of directors, they're not working properly, their policies are causing problems. They're unable to, right, to do anything in regards to this. Then RBI says, you please go home. I will oversee the bank. I will operate the bank. You please go home. And that power is also given to RBI. Next, under this particular new act, The UCBs as well as RCBs can issue bonds as well as shares in the market, raise capital, raise money. So what is a bond? What is a share? We'll discuss later. Please don't worry, I've written it. Will be discussed under financial market. Now RBI is also empowered to ask for a plan. If the RCB or let's say UCB is incurring losses, the RBI will simply say, can you recover? Can you turn around and start making profits? If not, RBI has the power to merge the cooperative bank with another bank. RBI has that power now. So these are the very, very important powers that have been given to Reserve Bank of India in order to better regulate the rural cooperative banks as well as urban cooperative banks. Now tell me, right, last question by the way, with these particular reforms, what do you expect? The RCB as well as UCBs, the regulation will be much better or much worse compared to RBI situation? Very simple question. With these reforms, what do you think will happen to the regulation? The RBI will have more powers to regulate. They can take policy decisions in regards to these particular cooperative banks, etc. That is what is expected. And please keep on checking the newspaper. This year alone, Reserve Bank of India has imposed penalties on large number of cooperative banks. Please check it, you will realize it. Reserve Bank of India has imposed penalties on large number of cooperative banks. Why? Rules are there, guidelines are there, they're not following correctly. RBI says, I will penalize you. It has imposed penalties on large number of these cooperative banks. Okay, now let's take a break. But before that, what if there are chances that the condition might improve and after some time the borrower will again start making repayment? You give me an example where it has happened. Imagine I've taken a loan. I will not repay for let's say 3 months. After 3 months, I'll come to and start repaying a loan. Has it happened? Any instances? Let me know. All these are just hypotheticals. Even if you start repaying 90 days, you are already classified as an NPA. The bank will drag you to IBC. So from where we know the company is auctioning, right? Go to IBC website, Baba. NCLT website is there. Check it. You'll come to know. And if you're reading newspaper very carefully, you will get all the information in newspaper also. Liquidation means selling too, right? Yes, liquidation means you're selling, but you're breaking the company. You're closing the company, breaking the company, selling the components. There are also recoveries there, but it will be very low. From where we can file a case in NCLT, right? The website is there. There are benches of the NCLT. Find out where are the benches. Go to the bench, file the case. IDRC is one more entity which has been set up. IDRC's role is to take the NPAs, sell the NPAs, collect the money, give it to NARCL. What if the amount to be paid is more than 30,600? We are not expecting that to be higher, but if that happens, we'll have to wait and see what the government will do. How it is ensure that IDRC is selling prevailing market prices and the assets are not being sold cheaply to buyers, ultimately leading to wastage of public money in making these banks stay afloat. Again, if you're trying to find a loophole, right, there is a concern, but why? You tell me, why do you think IDRC will do that? And what is the logic in doing that? In that case, everything can be seen with a doubt in the Indian economy. What is the guarantee that RBI will regulate it correctly? What if Mr. Shaktikant Das' nephew is sitting in a cooperative bank? Those kind of doubts you can always raise for everything in India. But again, I don't know why you want to find out a loophole always in the system. If PSCs are not banks, why are they listed under cooperative banks? Right? This is a pillar under the cooperative banking structure. These are not strictly banks because they are involved in collection and lending. Generally, while discuss all the three pillars. Don't you think so much institutions in case of NPS doesn't complicate the process? No, it doesn't complicate the process. The institutions, for what purpose they are, right? What is this? Everything is very clear. If it is a legacy NPA, NARCL. If it's a new NPA, IBC. That's very clear to you. As a bank, you will know where to go. Okay, let's take a pause now. 8:05. I'll start at 8:10. I'll start at 8:10. Okay. Am I audible to you? Can I start? Am I audible to you people? Great. Let's start. So next one is Regional Rural Bank, RRB. Now before I go forward, right, many of the students in every batch, right, and very valid question also. You have a doubt and you ask me, sir, if there is a scheduled commercial bank, why do we set this up? If you have a private sector bank, why this, etc., etc. First and foremost, understand this. The concept of regional rural banks originated in India back in 1975. We have not set up the banks now. These were set up in 1975. From then we started setting up RRBs. And please go back in history and have a look at it. What was the situation of rural part of India in 1975? So how can I understand what happened in 1975 in rural part of India? We have discussed nationalization of the banking sector. Nationalization in the banking sector. And while discussing the nationalization in the banking sector, what did I tell you people? Did I simply say that the reach of the banking sector in rural part of India was very high? Farmers were able to get full amount of loans that they wanted. Industries, that is rural part of India, industries, they were able to get large loans. Of course, the answer to all the three questions was no, no, no. So understand the idea of RRB from that context. Right? You will have a doubt, sir, if there is already a public sector bank, why are we opening RRBs? The answer is there itself. Right? The idea of nationalization came into picture in 1970s, 1980s. So we already knew that reach of the credit in the rural part of India was very low. The poor people, they were unable to get access to loans from the banks. Agriculture sector, they were finding it very difficult to get access to loans. Rural industries, such as let's say khadi industry, they were not able to get access to loans. So that is the precise reason what government of India did was in 1975, they passed Act, Regional Rural Bank Act, okay, RRB Act. And as a result of, right, as a result of the Regional Rural Banks Act, we started establishing, setting up Regional Rural Bank. But some of you now will say, sir, if there's a public sector bank, and again, very valid question, I'm only answering your question. If there's a public sector bank, they will also open the branches in RRB, that is in rural part of India. And a regional rural bank will also open branches. Don't you think there is a lot of branches being opened? The answer to this is 2 points. Follow this very carefully. Two very important points. Okay. What are 2 points? One, the role of RRB, the role of regional rural bank was limited to 1 or 2 districts. I will repeat the statement. The role of RRB was limited to 1 or 2 districts. That's it. Right? Imagine the 2 districts A and B, and RRB wants to function. They are allowed to open branches only in these districts. They're not allowed to expand beyond this. So one, are they opening too much branches where PSBs are already present? No. And when I say districts also, they were not focusing on cities. They were focusing on villages. They were focusing on villages. Right? They will focus on villages. Next, have a look at this very carefully. The public sector banks. Okay. Right? The public sector banks. Right? Have a look at the problem here. The public sector banks, if they also go to the villages and start opening the branches, now there is one more problem. What is the problem? If RRB is there, what is the point? And that is the precise reason. The structure of RRB was very simple. The structure of RRB was, RRBs will be owned by 3 entities. I will repeat the statement. RRBs will be owned by 3 entities. What are the 3 entities? Right? A sponsor bank. A sponsor bank. Second one is, right, state government. And the third one is a central government. A sponsor bank, state government, and the central government. So what is a sponsor bank? Imagine a public sector bank such as SBI, State Bank of India. Imagine a public sector bank such as State Bank of India will come along with the center as well as the state, will open up, right, one RRB. So if a public sector bank such as SBI is already opening up RRB and they are opening the branches in these villages, why do you think the PSBs will go again in the same village and open the branches? Right? Have you understand, sir? Any example of this? Any example of this? I've given certain examples. Have a look at it. Have a look at this. These are some of the, not all of them. These are some of the examples of regional rural banks. These are some of the examples of regional rural banks, RRBs. Right? I've given 10 examples, so only 10. There are hundreds. You don't have to worry. Just for sake of understanding, I've given it. And when SBI is working as a sponsor bank, have a look at the example here. As of 31st March 2022, there are 14 RRBs wherein the SBI has been acting as a sponsor bank. I'll repeat the statement here. Right? It is the SBI which has acted as, or which is a sponsor bank in 14 RRBs, right? 14 regional rural banks. Right? Example I've given here. Have a look at this. What about PNB, Punjab National Bank? Right? There are multiple RRBs wherein PNB also is a sponsor bank. So the logic is very simple here. The center, state, as well as, right, a sponsor bank will come together, set up RRB, regional rural banks. And these RRBs will work in specific districts, 1 or 2 districts. And beyond this, they will not expand their scope of operations. So what are the objectives? 1, to promote rural economic development. To promote rural economic development. Right? For example, sir, how they will promote rural economy. Imagine a farmer is there. Farmer will get a loan from RRB. An industry is there. Right? They will get the loan from RRB. Right? A village household is there. Very poor household. They will get the loan from RRB. So don't you think if they get the loan, they will start consuming, they will start producing, that will promote growth in the rural economy. Second, to provide credit, to provide loans for agriculture and allied activities, such as beekeeping, fisheries, right, or let's say milks, or the harvesting of the other products, etc. So to provide credit for agriculture as well as, right, the allied activities. To promote village industries, painters, carpenters, artisans, etc. To reduce the dependency of the rural part of India or the villages on, let's say, rich people or money lenders. Why? Whenever you take a loan from money lender, the rate of interest charged is very, very high. I will repeat the statement here. When you take a loan from this money lender, rate of interest charge is very, very high. Right? So we want to reduce the dependency. Right? We want to reduce the dependency. Otherwise, what will happen is you will have to pay a very, very high rate of interest. Now, some of you are asking, can a private sector become a sponsor bank? Please go back to the idea of 1975. Right? Apply common sense. You will understand. In 1975, were we promoting private sector banks or public sector banks? You answer. You will know the answer, by the way. Right? Were we promoting more of private sector banks or public sector banks? And you already know the answer. Why complicate everything? Right? You already know the answer. To make the backward as well as the tribal areas, right, improve the situation of these areas, promote economic development in these areas. Now, what are the features of the RRBs? 1, they are having a sponsor bank, a commercial bank, and these are public sector banks. Right? Why 1970s? 1970s mainly public sector banks. So we have a commercial banks, and these commercial banks will provide capital. Right? They will provide a capital 50, 15, and 35. I'll repeat it: 50, 15, and 35 percentages. 50 is the sponsor bank, 15 is the state government, and 35% is the contribution done by the central government. 50 is to 15 is to 35%. So there is a sponsored bank. Is it just the role to provide money and leave it like this? No, the sponsor bank says, I will not just give you money. What I will do is, I will appoint a person, I will appoint a chairman who will oversee the functioning of this particular bank. It is this chairman who will operate the bank. Third, already mentioned, 1 or 2, right? 1 or 2 districts. These are generally associated with 1 or 2 districts. They do not go beyond 1 or 2 districts. And RRBs, look at the most important point. The PSL, RRBs, right, are supposed to provide 75% of the lending in the form of PSL, priority sector lending. Okay, let me go to the next one. What are the concerns or the issues related to RRBs? Okay, concerns or issues related to RRBs. One, there is a very slow mobilization of the deposits, right? RRBs, it's a bank. It's simple. RRBs, it's a bank. They will collect the deposits and they will issue loans. They will collect the deposits and they will issue loans. Then that's their basic objective. Now, if the RRBs are unable to collect more and more deposits, what will happen to lending activity? You already know the answer. If RRBs are unable to collect more and more deposits, what will happen to the lending activity? That will get affected. Imagine they have given loans, but the loans are becoming NPAs. The loans are becoming more and more NPAs, just like a public sector bank. Here also NPAs are there. So is there an issue of NPA in cooperative banks? Of course, yes. Anybody who is involved in lending, there is an issue of NPA. It is a common denominator for all the lenders. So one, RRBs are unable to collect more deposits. As a result of this, the loans that they're giving, it is slowing down. Second, they have given loans, but they're unable to recollect. NPAs are higher. And third, they have opened a large number of branches. They've opened within 1 or 2 districts, large number of branches. And when you open large number of branches like this, what will happen to cost of operations? What will happen to expenditures, etc.? The cost of operations will also keep on increasing. So NPAs are increasing. You are unable to collect the deposits, and right, your expenses are also increasing. Do you think mixture of all of them? Right, what do you think will happen to RRBs? RRBs are incurring losses. There are large number of RRBs. They are incurring losses. Right. So that is the basic idea. Right. So there are concerns or issues related to regional rural banks. Okay. Next one, NABF ID. Right. Before you start typing long form of NABF ID, it is there in the slide. Please have a look at it. National Bank for Financing Infrastructure Development. So you told RRB has 1 or 2 branches. When did I say 1 or 2 branches? I said 1 or 2 districts. Please follow what I'm saying. I said 1 or 2 districts. I did not say 1 or 2 branches. Okay. So what is NABF ID? Current affairs. Focus on this. Right. NABF ID stands for National Bank for Financing Infrastructure Development. Now we'll have an explanation. We'll have a discussion on this. But look at the name and tell me. Look at the name and tell me what is the function of this. Right. Look at the name itself and tell me what is the function of this. Is it very much evident in the name itself? That is, it is a type of an institution which will provide loans or financing for infrastructure development. Have you understand? Right? Don't say, sir, right, I did not understand what is the role of this. Right? In the name itself, it is there. It is a bank for development of infrastructure. Very simple. Sir, why? Now your question is, why, sir? We already have banks. We already have public sector banks, private sector banks. Then what was the need to set up one more bank like this? Go back to the basics. Answer to these questions one by one. Whenever you're developing infrastructure, you want to take a small loan or big loan. That is a smaller loan or a larger loan. Correct? I will say larger loan or a big loan. Anybody has a problem? Let me know. Second question. If you want to take a larger loan, you want to take for a short duration or long duration. That short duration or long duration? Obviously, longer duration loan. Now come to the third point or the third question. If the banks are providing such loans, is there a problem in the banking sector? Right? I will repeat it. If a bank is providing such loans, is there a problem in the banking sector? Asset liability mismatch. Asset liability mismatch. Now we want to address all of them. We want to address all of them. How? We will set up one authority which will give large value loans for longer duration. And this authority, because they are collecting money in a different way, there is no issue of asset liability mismatch. Now, first two should be very clear to you. Third one, sir, how this bank will not face asset liability mismatch? How it will not face asset liability mismatch? What we are proposing for NABF ID is they will take loans from government. They will take long-term loans from government. They will take long-term loans from RBI. They will issue bonds, longer duration bonds in the domestic market, in the foreign market, etc. And they will borrow for longer duration. Now, you tell me, if you borrow for long duration and lend for long duration, do you face asset liability mismatch? I have to understand this. If you borrow for longer duration and lend for long duration, is there a problem of asset liability mismatch? No. That is the beauty of NABF ID. I have to understand this. That's the beauty of National Bank for Financing Infrastructure Development. Now, understand the points. Initially, to begin with, government will spend all the money and 100% ownership of this will be there with the government. 100% will be there with the government. And over a period of time, after let's say 1 year, 2 years, there is no mention about it. The government will reduce the ownership to 26%. I will repeat the statement here. Right now, Government of India owns 100% of it. And after a certain time period, right, they will reduce it to 26%. Sir, what will happen to remaining 74%? Government is saying, I will sell it to anybody else in the market. It could be an insurance company. It could be a mutual fund company. It could be anybody who wants to purchase remaining 74%. I will sell it. I will reduce my ownership to 26%. Next very important point. Right, have a look at this. Government of India set up such institution. Can you set up one more institution? Can you set up a similar institution? Of course, yes. Of course, yes. You are also allowed to set up such institution. But only condition is, now government says you'll have to apply to RBI, Reserve Bank of India, and right to take the permission. Apply for RBI, right? They will give you license. You want to set up an institution which is involved in giving long-term loans. Of course, why not? You can also set it up. What are the functions of NABF ID? What are the functions? One, most important, it will borrow from the market and will finance infrastructure development. It will borrow from the market and finance infrastructure development. And it's not like a normal bank. I have to understand this. It's not a normal bank. It's not like, let's say, ICICI Bank or an SBI. In ICICI Bank, you can apply for gold loans. You can keep a savings banks accounts. You can keep FD. All of that is not a function of NABF ID. Focus is on development of infrastructure. It will attract a lot of investments. Right? Imagine there is a project. I'll give a very simple example. Imagine there is a project. Cost of the project is 10,000 crore rupees. Now nobody wants to invest 10,000 crore. Right? No private sector would want to finance 10,000 crore like this. What if NABFID comes on the board and says, out of 10,000 crore, I will provide a credit of 5,000 crore. Can you manage remaining 5,000 crore from other banks, other private sector lenders? Of course, yes. So it will promote investment, attract investment into sector. If there is any dispute between ministries in terms of, let's say, development of infrastructure, they will try to mediate and try to resolve these particular disputes. You want to develop infrastructure, but you want to consult someone. You want to get the, right, let's say, inputs from some expert. They will provide the consultancy services also. So this is the role of NABFID. This is the role of NABFID. Now, what is the critical evaluation? What is the critical evaluation? Right? What are the benefits we're expecting? Right? What are the concerns or issues related to this? First one, infrastructure financing has a multiplier effect. What do you mean by multiplier effect? If you increase the investment by 1 rupee, total production will increase by how many rupees? I will repeat the statement here. I'm giving you the definition of multiplier effect. If you increase the investment by 1 rupee, how much will be the increase in the overall production in the economy? So how that will happen? We have discussed this, by the way. If you spend 1 rupee, start purchasing steel and cement, labor will be created, production will increase. Right, the demand in the market will increase. The virtuous cycle. By the way, I'm discussing the idea of virtuous cycle. So the infrastructure financing has a multiplier effect, good for Indian economy. Second, it is expected to promote virtuous cycle. I hope you remember the concept of virtuous cycle. We have discussed all of this, by the way. Right, employment increases, production increases, the demand increases, right, etc., etc., etc. And because NABFID will start providing long-term loans, because NABFID will provide long-term loans, the burden on the banking sector will also come down. The burden on the banking sector will also come down. Right now, the banks do not have to provide all the long-term loans. There is one more lender in the market. What are the concerns or issues related to the role of NABFID? First and foremost, understand this carefully. Imagine I want to construct, let's say, an infrastructure, road or bullet train project, whatever it is. Imagine I want to develop it. Now, NABFID has been set up. I can take a loan from NABFID. But what if I will not be able to acquire the land? I can understand this. What if I'm unable to acquire this particular land? Is the land acquisition problem in India? Of course, yes. Right? I'll give you current affairs example so that you understand. We were supposed to construct and start operating bullet train project in this year. I can understand this. We were supposed to construct and start operating bullet train project this year. Just try to find out what is the status of bullet train project now. It is not even completely constructed. Why? Acquisition of the land. Very difficult to acquire land. So there is a huge difficulty in India in terms of acquiring land. Right? So that will have an impact on development of infrastructure. Second, if this particular bank wants to provide loans for infrastructure, how will you find which is a bankable infrastructure? I'll explain this. Follow this very carefully. How will you find which is a bankable infrastructure? What do you mean by bankable infrastructure? Risks are known. Measures are already taken to reduce them. I'll repeat it. How do you define a bankable infrastructure project? The risk is known and you already have taken measures to reduce them. So what do you mean by this? Let me give a very simple example. Right? Let me give a very, very simple example. Imagine tomorrow is your exam. I give the same example because you'll understand it quickly. Then I'll come to the real life example. Tomorrow is your UPSC preliminary examination. All you need is hall ticket and a pen to go and write the exam. Right? Anybody wants to counter it? Let me know. All you need is a hall ticket and a pen, right, to go to the exam hall and write the exam and come. Right? Aadhaar card, etc. Okay, Baba. Aadhaar card, PAN card, take that also. Okay. Now, tell me frankly, when you go to write the exam, will you carry only one pen or more than one pen? I can understand this. Right? Will you carry one pen or more than one pen? Right? Of course, most of you. I know there are some who think, right, I'm the common man, I'm the norm. Right? Some people will say, sir, no, only one pen is sufficient. Then my counter question is, what if the pen stops working? Have you not thought of it? Let me know. Have you not thought of it? You already have thought of it. That's the reason your answer is, sir, I will carry 3 pens. I will carry 2 pens. Right? So what you've done? Let me know. Are you applying this particular statement? Let me know if it is not correct. Are you not applying this particular statement? Risk is known. Measures are taken to reduce them. Right? Same example. I'll continue. Tomorrow you're supposed to reach the hall by, let's say, 8 o'clock or 9 o'clock. Whatever the time is, don't worry. Will you sit and plan which route you're supposed to take? Are you supposed to go by bus? Are you supposed to take a metro? Or are you supposed to go by your own vehicle? Will you not plan it? But how many of you will simply say, sir, that Sunday I will simply wake up, based on the time I'll decide. Right? I will wake up first order or first priority is waking up. And then I will basically decide, should I go by this, that, etc. That's a very bad planning, by the way. Right? So again, are you not following the statement? Risk is known. You already have taken measures. Sir, don't tell this. Tell what is there, what is required for infrastructure. I'll come to that, my dear. Imagine you're constructing a road and you need labor. Now there is a pandemic. If you have a plan, if you already have a plan, if there's a pandemic, labor supply comes down. How do you address this? Will you purchase one more machine? Or in the nearby there is a village, you will hire them, pay them the wages, get the work done. That is nothing but a bankable infrastructure. Have you understand this? Right? That is nothing but a bankable infrastructure. You know that there is a risk in developing infrastructure. And let me know if you think there is absolutely no risk involved in developing infrastructure in India. So you know there is a risk involved. You already have taken measures to reduce the risk, to mitigate the risk. Such infrastructure projects are called as bankable infrastructure projects. Next one, bond markets are not deep enough. We'll discuss this when I take a financial market. I will not discuss this today. I will discuss this in the financial market. Pakka I will discuss, don't worry about it. Right? One of the problem is the bond market is not developed in India. I'll discuss it, we'll connect it to infrastructure, please don't worry. And finally, what if there is a delay in providing government clearances? What if there is a delay in providing government clearances? That will also delay the infrastructure project. Okay, so this is a discussion regarding the critical evaluation of, then this is good, how it is issue, which is good. Which is good? If you say then this is good, how it is issue, you tell me which is good. I will clarify your doubt here. Okay, small finance bank. Second point. What is the second point? How to find a bankable infrastructure? You are the chairman of the NABFID. It is a challenge for you to find a bankable infrastructure. I'm saying it's a challenge, you're saying it is good. Right? I don't know how you basically pursue the language. I'm saying it's a challenge for you to find which is a bankable infrastructure. You're saying, sir, it is very good. Okay. Last three more concepts are there, then we're done with banking. Small finance bank and payment bank, and finally NBFCs. That is the end of the discussion for banking. Right, we'll finish it. Let's start. Small finance bank. Right, what is this idea of a small finance bank? Before that, let me start with one more term, financial inclusion. There's a term called as financial inclusion. What do you mean by financial inclusion? Right, understand this. What do you mean by financial inclusion? Providing the financial services. I'm giving a definition. Providing financial services to the people in a very, very cost efficient manner. I will repeat the statement here. What is financial inclusion? It simply means providing the services, financial services to the people in a very, very cost effective manner. I'll give you a current affairs example. Pradhan Mantri Jan Dhan Yojana. Right, very recently it was there in the newspaper. Has completed 8 years. A prime example of a financial inclusion. SFB is an example of a financial inclusion. Sir, how Pradhan Mantri Jan Dhan Yojana is an example of financial inclusion. Before this scheme was implemented, before JDY was implemented, if you want to open a bank account, the manager will ask you, give me your address proof, give me your photo ID proof. You'll have to keep 1,000 rupees in the bank account, etc., etc., etc. Now, if you ask, let's say, a worker who is working on daily wages, if you ask this person, where is your address proof? Where is your PAN card? Right? Can you keep 1,000 rupees in a bank account? Don't you think that becomes a problem for the worker? Have you understand this? Don't you think that is a problem for the worker? Of course, yes. So what Government of India did was, right, all these conditions are not applicable. All the conditions are not applicable. You want to open a Pradhan Mantri Jan Dhan Yojana account, just walk into the bank, show them your Aadhaar card, they will allow you to open a Jan Dhan Yojana account. Right? That is the basic idea. Government is providing the services to the people in a very, very cost-effective manner. As cheaper as possible, the services should be made available to them. I'll give one more example. There is a concept called as a bank sathi. Bank sathi, or else there is one more name, banking correspondent. Bank sathi or banking correspondent. What is this bank sathi or banking correspondent? Right? Imagine you're a farmer. Right? Understand this. Imagine you're a farmer. You have a bank account. Government of India has transferred certain amount in your bank account. First question, answer to these questions promptly, you will come to know the importance. Do you think all the villages in India have a bank branch? Right? No. Thanks a lot. Second, if you want to withdraw money now, is it okay if I say that you'll have to travel certain distance? Let's say 8 kilometers, 10 kilometers, 12 kilometers. Correct. Third, when are the banks open? During working time or in the night? I will ask you, I will tell you the reason why this is important. These are open in the working time, 9 to 5, like this. Now you're a worker. You're, let's say, a worker in the field. You're a Mandrega worker. When do you do the work? Do you do the work during the same time, or right, you will start digging up the well in the night? Right? Obviously, same time. Now we have established that you need to travel, and we have established that you are working at the same time. Now put both of the points together. During the same working hour, when you're supposed to work, if you travel 8 kilometers to withdraw money and come back, will you lose the wages or not? I understand, will you lose the wages or not? Of course, yes, you will end up losing wages. So have a look at this. I have a bank account, but accessibility is a problem. If I want to get the funds, I will lose my wages. In order to address this, from 2006, RBI has introduced the concept of bank sathi or banking correspondent. Okay, bank sathi or banking correspondent. What is the role of a bank sathi? Imagine here is a village. Here is a village. There is person A in the village. The bank will appoint A as a bank sathi. Have you understand this? Imagine I am that person, and all of us are there in the same villages. I am that person. So State Bank of India has appointed me as a bank sathi in the village. So you don't have to go to bank now. You can come to me for basic banking transactions. I'll repeat the statement here. You don't have to go all the way to the bank. You can simply come to me for basic banking transactions. What do you mean by basic banking transactions? You want to withdraw money. You want to deposit money. You want to apply for a loan. You want to apply for opening an account. These are basic banking services. Right now, some of you say, sir, what if I require 10 lakh rupees? I require 20 crore rupees. You're talking about a village. Mind you, you're talking about village. Who will require 2 crore rupees in a village? If that is the situation, I will only say, please go to the branch. I don't have 2 crore rupee cash with me. So understand this, the concept of bank sathi is simple. They will provide the basic banking services, right? So that you don't have to travel all the way, have inconvenience over it. And now, is it okay if I say, we are providing financial services in a cost-effective manner to the people? It is an example of a financial inclusion. Let me know. Is it not an example of a financial inclusion? Right? Of course, yes. So this is the basic idea of financial inclusion. Come to small finance bank. Come to small finance bank. What is the role of financial inclusion? Sorry, for small finance bank, I will start using the short form SFB. SFBs will promote savings. Bank means obviously they are going to promote savings. Second, they will provide loans to small and marginal farmers, smaller manufacturers, small traders, etc. So are they providing loans to the people who actually require them? Yes, that is the role of small finance bank. Is it okay? Right, let me go to the next one. Minimum equity paid up capital is 200 crore rupees. And that is the one who is going to start, the owners will put in, right, 200 crore rupees. They will have their ownership. Right, the amount of investment should be at least 200 crore rupees. You can also have foreign investment in this. That is, imagine you want to start this particular bank, but you do not have sufficient amount of money to invest. Can you get the money from the foreign market? Can you attract investment from foreign investors? Of course, yes. Foreign investment up to 74% is allowed in this. Okay, so these are certain features. What are the functions? Accept deposits and provide loans. Provide loans to whom? Especially smaller traders, smaller businesses, small and marginal farmers, etc. That is the role of small finance bank. Okay, that is the role of small finance bank. And are there any norms? Prudential norms means norms, right, with regards to capital. Any norms are applicable on the small finance bank? Of course, yes. RBI is the regulator. There has to be. One, they will have to maintain CRR. They will have to maintain SLR. They will have to maintain CRR. They will have to maintain SLR. 75% of the loan. Simple terms. I'm explaining PSL now. Priority sector lending. 75% of the loans issued by them has to be under under PSL. Right, I'll repeat it. Small finance bank, 75% of the loans have to be given under PSL itself. And finally, at least 50% of the loans that have issued. Imagine a bank has issued 10,000 loans. I repeat, the bank has issued 10,000 loans. They said not 10,000 crores, 10,000 loans. Out of this, at least half of them, that is more than 5,000 loans, should be of a value up to 25 lakh rupees. They should not be more than 25 lakh rupees. They should be less than 25 lakh. Sir, why is such a condition? Condition has been imposed for a very simple reason. What if the bank, that is a small finance bank, will give very large loan to few people in a rural part? Have you understand this? What if this SFB will start giving loans, huge loans, to very few borrowers? Then it is not meeting the idea of financial inclusion. That is not financial inclusion. So what RBI says, you will have to give large number of loans, large volume of loans. Value per loan has to be lesser. Value per loan has to be lesser. I have to understand the meaning of the statement, right? So these are the capital requirements or prudential norms for small finance bank. Now I've seen some of the books writing this as 100 crore. Please update this. Some of the books have written this as 100 crore. No, it is not 100. It is in fact 200 crore. Please correct it. Okay. Next, payment banks. Next one is payment banks. Right. First point. Payment banks will have a minimum paid up equity capital of 100 crore rupees. Minimum paid up equity capital of 100 crore. Can you get, right? Can you get foreign investment under this? Of course, yes. Remember, you can get foreign investment in SFB also and right the payment banks also. What are the capital requirements? What kind of prudential norms are applicable? Right, the prudential norms which are applicable is one, the capital adequacy ratio, CAR or CRAR has to be at least 15%. CAR or CRAR has to be at least 15%. In that, the tier 1 capital has to be at least 7.5% and remaining has to be tier 2 capital. Now, by now, I'm pretty sure all of you know this. Tier 1 capital is more reliable, can absorb the losses much easily, etc. That is the reason that they mandate that the capital adequacy ratio should be 15 and most of it has to be in the form of tier 1 capital. And what are the functions of a payment bank? Payment banks, remember this, can collect deposits. They are allowed to collect a deposit. But there is a condition. What is the condition? The condition is that per customer, the deposit cannot be more than 2 lakh rupees. 2 lakh rupees. I repeat, they are allowed to collect deposits, but the deposit they are collecting per customer should not be more than, right, 2 lakh rupees. Many books have written this as 1 lakh. Please update it. Earlier it was 1 lakh rupees. Now it is not 1 lakh. It is more than 1 lakh. That is 2 lakh rupees. Second, right, understand this. The payment banks are not allowed to give loans. Very important. Payment banks are not allowed to give loans. Now tell me, if a payment bank is not allowed to give a loan, can a payment bank issue credit card? Simple question by the way. If the payment bank is not allowed to give loan, can a payment bank issue a credit card? No, I've already discussed. Credit card is a type of advance or a loan. So that is the second very important function. Third, they will have to maintain CRR, cash reserve ratio, they will have to maintain. And at least 75% of the deposits that they have collected, at least 75% of the deposits they have collected, they will have to invest in government bonds, dated securities or treasury bills. Right? And what about the remaining 25%? Remaining 25%, they will have to keep it in the form of deposits with other banks. I'll repeat it. At least 75% of the money that they have collected, deposits they have collected, they will have to use it, right, in the form of investment in government securities. Remaining 25%, they will basically be depositing with another bank. So then how are they earning money? Very valid question. How are they earning money? One, if you keep deposit, interest will come there. If you, right, invest in G securities, you will earn a return. Third, payment banks are allowed to operate as banking correspondent. I will repeat the statement. Payment bank is allowed to work as a banking correspondent. So when you provide a service such as banking correspondent, you will impose certain charges, collect the charges. Apart from this, the payment banks are allowed to provide remittance services. Remittance means transfer of funds from point A to point B. There also they will impose and collect the charges. So these are the different areas from which you can generate revenues. I know this is very limited. I know, right, sir? Only these are the sources. Of course, yes. That is the precise reason many of the payment banks are unable to survive competition. They are closing. I'll give an example. Aditya Birla company had a payment bank. They closed it. Why? They simply said, lot of payment banks are there and they're competing with scheduled commercial banks. We are not allowed to give loans. Very limited scope of revenue. So they submitted their license back. They closed their banking operations. Example of a payment bank, right? Basically, right, the Paytm Payment Bank, Indian Post Payment Bank, etc. Okay. So this is the discussion regarding payment bank. Now somebody is saying, some couple of people are saying, sir, but I got a loan from Paytm. Please check, did you get a loan from Paytm Payment Bank or a different entity of Paytm? I have to understand. Paytm is a common name. They're using it for multiple purposes. But please find out whether it is a Paytm Payment Bank which is giving a loan to you. And you will find that no, it is not a Paytm Payment Bank because payment banks are not allowed to give loans by default. Next, some of the important committee recommendations. Narsimham Committee 1991. There are two rounds. One was given in 1991, second one in 1998. Right, in the books they will say, let's say in UPSC, if they say Narsimham Committee 1, they're talking about this. If they say Narsimham Committee 2, they're talking about this. So please don't get confused. 1 and 2. And second point, follow this carefully. Second point is, when you talk about Narsimham Committee, rather than calling it as Narsimham Committee, they will also refer to this as Committee on Financial System. Committee on Financial System, CFS. Committee on Financial System, CFS. Same thing. Right? Narsimham Committee is also known as Committee on Financial Systems. Done. So what are the recommendations? 2 rounds. 1991, do not continue with branch licensing. What do you mean by branch licensing here? Even today, mind you, even today, if you want to open branches, RBI will tell you 25% of the branches you'll have to open in villages. I can understand this. Even today, if you want to open branches in India, bank branches, RBI will tell you 25% of the branches you open in villages. Right? And now, this is called as branch licensing. This is nothing but a branch licensing. Now, many of the students will ask, sir, was the first recommendation implemented? Was the first recommendation implemented? When I told you just now, even today, RBI will mandate that 25% of the branches will have to be opened. Right? You don't ask such questions. You already know the answer to this. So first one was not implemented. And what was the logic? The logic of the committee was, you are a bank. And you know where it will work out if you open branches. If you open in urban part of India, or in cities, or in metro cities, or in villages, it should be your decision. Nobody should tell you where you're supposed to open branches. It should be your decision. No further branch licensing. Second, no further nationalization. Did we go for nationalization after 1991? You already know the answer to this. Third one, PSL should be brought down to 10%. Right? PSL should be brought down to 10%. Right? What is the PSL today? 40%. Don't ask me, sir, has it been implemented? You already know the answer to it. Phased reduction in SLR and CRR. Earlier, SLR plus CRR was more than 60%. Earlier, SLR and CRR was more than 60%. Today, what is SLR? Around 18%. What is CRR? 4%. Right? Already implemented. Computerization in the banking sector. You tell me, when you visited the bank, are the banks using computers or they're still writing in a book? And I have to understand this. Computerization of the banking sector, of course, yes, it has been implemented. Debt recovery tribunal should be set up. Do we have DRT today in India? I will know that. Right? Do we have DRT today in India? Right? Of course, yes, we have already discussed it by the way. Setting up of ARCs. Do we have ARCs in India? Yes, sir. Right? We have discussed this also. Private sector entry should be allowed. Are we allowing only public sector banks? Or post 1991, we have allowed private sector to open the banks? You already know the answer to this. HDFC, ICICI, etc.